we're going to add $3 to the price of that spread. So if we can get that rally, come back up and test the snow line, which would make sense based off the strength of the 5-minute squeeze, that should take the spread down to about 13 cents. Now, could you sit here and try and hold it, continue to get out maybe at worthless, or try and close the short leg at a nickel? Absolutely, and all that makes sense. But the way I look at this is I've got a lot of different positions on. If I can come in and take these off in areas where I'm almost at max profit anyway, I think that makes a lot of sense. So what I'm going to do for this one is just try and work and get out right there about 15 cents. I can come back down into my position, and it's always handy when this thing will actually organize them by your order. Let's see if that's going to work this morning. Had a little bit of trouble with it last week, but right now the vertical is coming up, so I can close this out as an entire spread. I'm going to have this order working at 15 cents. And then, of course, as soon as that is filled, I will let you guys know. But remember, this works on a first-come, first-served basis. So if you have your order sitting out there working, you will be first to get a fill. And I definitely like the way Amazon is acting so far this morning. I also very much like the S&Ps, and I like Tesla. So Tesla's coming back. We have almost hit these targets up at the 1272 extension. Once again, that comes in at 188.20, and we're trading about 40 cents from those prices. We had a 1-minute squeeze that fired to kind of start off the day. If we can hit this level at 188.22, I'm going to be aggressive about getting out of my directional positions that expire this Friday. And then, of course, the ones that we've got a little bit further out, we can give a little more time. Triple D is a little soft, but remember the area I'm focused on right there is 54, 56. As long as we can hold that, we'll be in good shape as well. So Facebook doing well here, getting a nice move off of this. Now, a couple things you can do with this. And here again, you're kind of having to allocate your resources to how many different ways you want to manage these things. What you can do is look at Facebook and say, if I know that my directional calls have not traded lower than $2.80 today, it's about 30 cents from where we're trading right now, essentially at my targets. One thing I can do with this to try and allow myself to hang on to these a little bit longer is put a trailing stop on it. I can say that 30 cents has been the range for today, so as long as Facebook keeps pushing higher, I think that's a fine way to manage it. So I open up this area here. Actually, I'm going to bring over the full option chain, so I'll do this a little differently than I was talking about this morning, just for the sake of hopefully providing a good example. So I'm going to come back down to Facebook. I'm going to look at closing out all 5 of these $47 calls. So I select the 2. I adjust the order number to get out to the exact number of contracts. And I'm going to change this over to a trailing stop. Now remember, the value that we had specified for this was going to be 30 cents. And I'm just doing those off of the market prices. So now that that's been submitted, of course, if Facebook just straight up sells off, well, then I'll be out of those positions, and the example didn't really work out that well. But if this does work out to where the lows on the day hold, and then Facebook can continue moving higher, it gives me the opportunity to try and make a little bit more with it. It's one of those where if it keeps running, I'll stay in the position. If instead it rolls over, well, then I've got my stop sitting here waiting. So that stop right now comes in at, it's a little lower than I wanted to see it, $2.60. It went off the market price at those options. So there again, that may not end up being the best example, but just trying to show a couple different ways to watch these positions. I do like the way the S&Ps are acting. Notice how the ticks have come from a positive 400 opening straight up into 600. This is not gap fill type action. This is, strong movement. And we can also see that the vol spread has, it's better to give yourself a good 30 minutes or so to let the vol spread really show you what the trend on the day is going to be. But so far, everything does look decidedly bullish. So we've got the first few minutes of the open behind us. Let's kind of take a look at what else is going on. Celgene and a daily squeeze, those are all going to be excellent tickers to look at today, Justin. Like I said, I just kind of want to make sure that everything we've got on is being managed. We've talked about Amazon, where I like the way that 5-minute squeeze is fired. We're looking for targets up into 318. I like the way the market is acting bullish inside of that. Facebook there again, too. If you picked up the call options on this one, and the call debit, it still kind of stems around the idea that Facebook is going to be able to pin around Friday at $50. So at this point, you've got a gap fill that would take you back down to That gap fill is going to be right there around 49.48. So you get the gap fill, maybe, maybe not, but at least if it tests that level, then I'd like to see it rebound from there and move back higher. So remember, for Apple, this is still one that I just don't have a clean idea of what's going on there. It's just been so choppy around 485. You know, could you suggest a butterfly around 485? The logic behind that would make sense because it is a clean area of support and resistance noted by the snow line. You also want to take a look at the open interest of the contracts there and see if they can give you any kind of information. I usually do not look at this type of information on the weekly contracts because there's not as much build around them. But you can see the idea we're talking about here. So when I look at this, and I saw that there was a few people in the room, I don't remember exactly who had mentioned it, but he said that he sold half of his position in the 485, 490 call spread. And I think I would have to give that the benefit of the doubt, because if you look at the open interest, you know, where does this start to stand out? Well, you've got a lot of open interest here from, you know, basically you see this big jump from 480 into 485. That means there's a lot of open contracts here that are at 485. Also notice how there's a lot more open interest on the call side than the put side. And that's because, as a general rule, you're going to have your retail traders that are more focused on buying calls and institutions that are selling them to them. So if I had to pick a play right here on Apple, doing something that would benefit off of the decay around 485 would make sense. If I flip this back down to the vertical, I can see that the 485, 490 call spread is trading for $1.80. That is not a bad credit. The only thing I don't like about that is the market here is still relatively strong. So instead of doing that, what if I say instead, what about the butterfly? Because remember, when you do this play, if I took in $1.80, that would mean I'm risking $3.20 if the market did, you know, explode higher and Apple went with it. If instead I look at the butterfly, well, the one that is wrapped around 485 is currently trading. Let's just look at the last price, or maybe even the market would be fine. It's going right here around $1.30. I like this play as long as Apple could consolidate at 485. You know, it's something where you could look to probably double your money, or you pay $1.30 for it, and then if you're able to get around $2.60 for it, I think that would be great. So that is one trade there that I can kind of follow along with you guys with on Apple. That would benefit from the idea that it's going to hold pretty much right at 485. Of course, with something like that too, you also want to make sure there aren't any squeezes that are moving against you. So yesterday when I was looking at this, I pointed out that I was a little hesitant off of the 30-minute. And then here again, you look at the exact same thing. So notice how there's only a 1-dot squeeze on the hourly chart, but that is still something that I do give some credibility to. So I don't know. Here again, I would love to put a trade on an Apple, but it's just not setting up for me technically. When I've got that hourly squeeze that's firing short, that would vouch more for the sale of the 485, 490 call credit spread, because I'm expecting downward momentum from the hourly squeeze, but also giving the fact that this area is holding its support, it's just not a clean setup. So as much as I would love to trade Apple and give you guys some recommendations on there, if you want to try the 485 butterfly, I think it's cheap enough that you could look at a 1-to-1 risk-reward ratio and you might be able to make some money off of it, but it is just not that clean at the moment. So let's go ahead and switch this chart over. We'll take a look at a few more tickers that we can discuss and kind of see how things are going from there. Ticks have pulled back to 0. So a little bit of a pause as we come up here and try to approach 1695. It'll be very interesting to see if we can get through those levels today. So like I said, right now most of what we've got on is cooperating. I'm going to go through these lists one more time and we'll be able to kind of manage some of these, but I also want to see, are there any other opportunities on any kind of gaps this morning? We take a look at price line. I first want to check, do I have an hourly squeeze? I do not. 30-minute chart has fired short, but that momentum is starting to exhaust. So right here, right off the bat, this just tells me that technically speaking, there is really not a reason that I should come in here and focus on this chart, because I am bullish in the markets, but this signal is giving me a bearish opinion of what's going on. When that 30-minute squeeze fires short like that, you can kind of see how it, you know, had this divergence. Now, when this momentum starts to subside, could you try and take a long play off of that? Sure. But remember, the squeeze is not a tool that you're going to use just based off reversals in the histogram. You really want to focus on areas where this momentum has built up and it's showing you you're about to have a big move. So there again, not a bad idea to play price line to the long side. I can understand why you might want to sell a put credit spread. But when that squeeze is moving against me like that, I'm just going to look for other opportunities. We've also seen how these fire lines kind of act like magnets. So the idea of testing 1015 again makes sense. It is just not setting up especially clean at the moment. Triple D doing very well. Remember, the target on the remaining part of our position there comes into 60.53, so really not a lot I have to manage there either. Facebook kind of drifting. I do want to see that it can hold the gap fill. I've got those trailing stops that are sitting there. Of course, the trailing stop is not going to do you any good if the stock can't rebound. You know, it's essentially going to be the same thing as having a 30-cent stop just sitting in there working. So that's not anything we have to worry about. And absolutely, we can flip over to things like Google. So for Google, we talked about yesterday how it's come down into a pretty important area of support, I think. Now, when John was looking at this last night, he had a little bit more of a bearish opinion of the stock because of the fact that it had a daily close below the 21 EMA. That's fine from a swing perspective. I'm just looking at this to say, what is it going to do over the course of the next 2 days, today and tomorrow? When I start looking at this, I know that we've got an area of support, basically a clustered area of support at 875. I also see a 5-minute squeeze. Now the waves here are mixed. The C wave is below 0 while the A wave is above. So I want to go to a higher time frame to look for some confirmation. 15-minute chart, nothing there. Taking a look at an hourly and a 30-minute chart. What I see here is very similar to Priceline. So with Priceline, we talked about how the hourly squeeze had fired short, and you see the exact same thing on here from Google from the 30-minute. But notice that this is trying to, kind of move its way back higher. That's what this histogram is showing us, where that has started to lose its momentum. So basically all the things that I'm looking at here, this would be a counter trend trade, and this is not the cleanest thing I see so far. I'm just discussing what I see, is that 875 is a cluster of support. The squeeze has started to lose its momentum, and there should still be a good amount of premium here in the 875, 870 put credit spread. If I did something like this, it would be stemming off the fact that the market is strong, and I would also want to very closely consider my risk reward. So we go ahead and drag over an option chain, and we begin to evaluate this week's options in Google. Baidu is quiet, so that'll be a good one to come over and take a look at here in just a moment. Remember, with Google here, I'm discussing a directional bias, because we are expecting that it would move higher off of these zones. Now this is also an area where if I sold this put credit spread, I would want to have a stop on it, because if it does just reverse and start, crashing back lower, I do not want to take a full potential, $4 loss on this when the spread is trading around $1.20. However, it looks like a decent opportunity to try and get in. If you can hold the cluster of support, then you're going to be able to, obviously move higher. So let's spend a second on this, because this will be an interesting counter trend play to discuss. We know that the 30-minute chart is losing its downside momentum, and we know that we might see a trigger here off of the 5-minute. We want to talk about the 8 and 34 moving average crossing through each other. That is one of the triggers that Caroline likes to use against her zones, and I also use that with my trading. You can also see that you've got a 5-minute squeeze here that is expecting to fire long. So I actually don't mind selling that put credit spread, knowing that my hard stops are below this 875.60 level, meaning if that breaks, it's time to get out. That is not something to sit there and sugarcoat it, and maybe we give it a little, because it's always tempting where if something like that breaks, it's like, okay, let's give it a little more room. That is not what I'm talking about here with Google. I'm talking about the markets are very strong. S&Ps look like they're trying to break 1695. And if all of that happens, I think there's a good chance Google will hold above 875. So let's go ahead and come over here. The thing I like to do too, if you've got a wide bid-ask spread, you can flip it back down to the last price traded to see where people are actually getting filled on this one. So $1.05 is the current going price. Remember, if I want to sell this, that means I'm going to come in on the bid, because this is what people are actually willing to buy this for. Now remember, with Thinkorswim, when you come in to sell a spread, it's automatically going to place you at the mid price. Okay, yeah, and I see a couple questions coming through in the chat room, and I'll try to address those as quick as I can, guys. It's just one of those things where I don't have any exposure in Google, so I have the luxury of being able to approach this from kind of a fresh perspective. If you've got another position on that you've got questions about, I'll be happy to answer those once we kind of die down here. So notice as Google kind of calms down, pulls back a little bit, the bid-ask spread becomes a little bit tighter. If you're trying to work your entries in here, and this will be another that we won't text this order, so we can just manage it here in the room, and it'll be a real-time example. But I'm going to go ahead and put my offer out here at $1.20. That would imply that we do get a little bit of a gentle pullback into that area to get filled. And then from that point, you guys know the stops that I'm looking at as well. So right now it's jumped up to about $1.25, $1.30. I'm going to keep my position size small on this one so I can manage it objectively in relation to everything else that's going on here. I bump that up to $1.30. If I come back over to the dot on the left-hand side of this order, I can copy the position, which allows me to share it with you guys a little bit easier. And let's see here. Okay, I'm not sure where that order went. It said it was submitted, but we'll take another look at that. So Google is definitely pulling back. Remember, as it pulls back, you're going to be able to sell it for a higher credit. I think what happened is my Facebook order was filled right then, and that did something to cause a problem here. So give me just a second while I figure out what's going on with this order. Of course, the market overall still looks great. So I can see that Google's still sitting there kind of right at our prices, so nothing wrong with working the bid-ask spread in here. So Tesla's still working to come up into our targets here. Hasn't quite been able to get it. That 1 minute squeeze did fire long, so still like the way that one's acting. Our Amazon put credit spread is trading for a market price of about 25 cents. We're quickly approaching those targets. There again, if we tag 318.09, I can be more aggressive about just getting out. But right now, anything that I have to the long side, I'm kind of giving the benefit of the doubt to go with the market, and then we can kind of take a look at some of these others. So, like I said, Facebook I think still looks like an excellent long candidate. I am out of that one. That was not the cleanest exit in the world, but hopefully gave you an idea of a few different ways to manage the positions. Amazon, we've discussed the plan for that one. For BIDU, we're up 62 cents here, and we've got a squeeze that's looking to fire long. Remember, with BIDU, we sold the 148 puts. So what we need to see happen here is that at least 148 could hold up. Now, if I come in here to my studies, I want to go ahead and add the voodoo lines back to these. I also want to drop down the number of levels that are being displayed so I can hide the midpoints. And like we talked about with these, you've really got two zones right here that you can focus on with Baidu. Now here again, 1 minute's kind of small, so let's take it into a 5 minute. This is where I see 152.74 as being the next kind of clean target. I also like the fact that we've got this support at 149.27 that comes in above the put that we sold. So I think Baidu is doing perfectly fine here. The 148 put has a high probability of expiring worthless, and there's nothing we have to manage there. For Triple D, we've already discussed how that one's moving. I love the January calls, I love the October calls, and I'm going to continue to sit on them. For Facebook, I did take that trailing stop order, was not that clean this morning. You came down into a gap fill, and now I think it's getting ready to make the next leg higher. So if you've got the call debit spread, obviously that's a lot easier to hold than the position that I had. I think you're in great shape and there's nothing really to continue tracking there. As I pointed out, for the NVIDIA and SanDisk plays, these are not things that I'm going to spend a lot of active time really managing, but it's worth at least kind of touching on just to see how they're doing. So far, NVIDIA is very quiet this morning, but it is up. SanDisk is up better than 1%. So we got a really nice entry on SanDisk. That's kind of where, when you're looking at it and you're trying to consider, do I really want to pay up another penny or 2 pennies to start getting into this stuff? It's not going to make a big deal in the broader scope of this analysis. And things are just ripping here, guys. Ticks have made a new high, I believe. Yes, so ticks have reached a new high on the day. Vol spread is decidedly bullish. And this is the kind of stuff that I do where you do not have to be sitting here watching the news. Who cares what the headlines are saying about what's going on? I have everything I need to know from these sets of charts. So everything looks great right here. Like I said, Tesla still trying to test those targets. Amazon hasn't quite made it. I'm keeping an eye on Netflix to see if I can accumulate a position there. I think, so Bryant points out that he initiated the first part of his Netflix trade. That is a perfectly fine way to do that, because you can say, well, the 5-minute squeeze is fired long, but I'm kind of into this important area of resistance. Well, if you take a half size, that allows you to participate if it does just keep moving higher. However, if you get the pullback that I'm looking for, well, then you can get the other part of that trade in. So perfectly fine way to handle that one, Bryant. And I'm keeping it, like I said, that's why this chart here for me is right in the front and center. Because if it does pull back, I'll be active about looking at those. For now, it's just kind of measuring everything else we've got on and updating our current positions, and then we'll look at a few more tickers. Google is trying to hold that 875 level. And I had my accounts a little mixed up there. That's why that was happening. So I will spend a little bit more time managing this one in Google. Once again, if you haven't taken the position in Google and you're looking at this saying, well, wow, the whole market is just tearing higher, you're exactly right. And we can wait for the 5-minute squeeze to fire to get the rest of that position or establish a new trade. So Google and Netflix are on my screens as new potential opportunities. The rest of these charts I'm just using to manage and kind of keep an idea of current prices. So SanDisk is where we left off. SSYS is another that I saw that we had a question about. This is one that I'm just standing aside from and letting my position play out. Now, this was not one we discussed in the room. It's just something that I've been trying to perfect my strategies on, and then kind of have more stuff to share with you guys. Things that I'm watching in SSYS that we really need to be aware of the 618 retracement from the previous high to low. So from 113.49 down to this price. I would expect that you're going to have some resistance right here from about 105.26 or so. So I have a hard time suggesting buying it here. But if you break it down into a smaller time frame chart, let's call it the 30-minute, what you can do is start looking at these symmetrical pullbacks. Kind of measure those out on your chart, and then if you get another, well, then that's going to be an opportunity to start buying it. I do think off of the daily chart, it looks good for a test of 111.62, and then ultimately 119.35. So I definitely like SSYS, but there is, the only other reason that I might be able to suggest taking a new trade would be if you had another squeeze that was backing you, and you actually do here. So I can see that we've got a 30-minute squeeze that's fired long. And here again, this is just a mix of two signals. However you want to manage this, you can kind of make your decisions, but this is a decided bullish signal. This is going to be a big area of resistance. So, if you push on up through it and you took the signal, that's excellent. If instead you push up into it and it then stalls from there, well, then you'll wish you had a better position. It might also be a good area to consider a half size, and if you do get that pullback, you have the leniency to add into it. If you're doing something like that, make sure you're giving yourself enough time for your expiration to coincide with your trade idea. But that's another example where using these 20-day high-low strategies, having some sort of a reversal signal, which in this case, the one that I had been quoting was this reversal candlestick here, worked out really well. Because look how it worked previously in SSYS. Really nice reversal. I saw that again, and it's just a case where if the past is going to help predict the future, that was a good indication of that. So there's SSYS. Let's Let's continue down the line. Like I said, Tesla, we've already spent a good amount of time discussing that one. We know exactly what's going on there. For USO, I have lightened up on a majority of that position. So I still have a little bit of October left over, but I really don't think there's any reason to come in and focus on USO until we can start to clear bearish symmetry. Here again, if this stuff, there's a lot of people that gave us some feedback yesterday saying, I like what's going on here, but the fib stuff is just too advanced for me. That's fine. Don't start off feeling like you have to run all those different levels. Instead, just look at this from a very basic perspective, saying, well, if this is my downward trend, or this kind of descending channel that's been in play, look at the rallies inside of it. Until you can get a rally that exceeds the point value of these, you still have to consider that it is in a downtrend. So, like I said, I've lightened up on that one. I'm not really going to spend a lot of time on crude oil until the daily squeeze can reverse. I still think long term, there's a great potential for this one to move higher, but it is just not something to be focusing on right now. And then if we take a look at the last ticker I've got on my list for today with X, remember this is going to be a slow-moving, boring play, which is fine. That's the kind of exposure I was looking for in this based off the weekly squeeze. So for those of you that just joined us yesterday, the X play is very similar to SanDisk and NVIDIA, where we're looking at a bigger time frame squeeze here, picking up some of those Delta 20 calls, just to see if over the long run we can get a bounce there. Or I don't want to say a bounce. I mean, I'm looking for a big move, but X is just not the, it's not a Apple, Google type mover. So just keep that in mind when you're considering stocks like that. So it's been a pretty interesting morning so far. We can see Google is holding up against 875. The squeeze has still yet to fire. So I've still got some extra positions I can add on into that one. Like I said, I have 2 accounts open, and I was accidentally trying to put it into the wrong account, which is what was giving me some problems here. So let's pull this Google chain back over and spend a little bit more time with it. Remember, we're looking at the 5-minute squeeze backed by the reversal in the 30-minute and a 30-minute cluster of support. So we pull this over and we're looking at the vertical. Here I can see the 875, 870 has dropped to about $1. So I'm going to go ahead and start picking these up. Like I said, the issue before was that I was in an account that I couldn't put anything else on, but this one I can go ahead and get the full 3 contracts that I was looking at before. So I'm going to drop this down to 3 contracts. I'm going to look to try and get $1.05 would be fine for me on this one. And I will copy this to complete the Google position. So hopefully those text alerts are descriptive enough that you guys know exactly what's going on with it. There again, I'll just kind of show you guys that are in the go-to room exactly what I'm looking at on this end and what the people in the room are seeing. So I can see here that I sold that initial put credit spread. We're not texting that order out, which is part of the gold membership service that we'll do. So this is just going to be something we manage in the chat room. The 3 contracts on this was also filled. And that completes the put credit spread. So both of those were to open. That means I now have a total of 4 contracts in this. This is kind of, and it's a fine line that you walk when you try to sell this premium, because if we wait and you say, okay, I really want to see that this 5-minute squeeze can give me a strong confirmation to the buy side, well then a lot of the premium here at 875 is going to evaporate. So you're trying to kind of preemptively get into these while still following the technical signals and defining your risk, and that's just the way we like to work a lot of these weekly positions. And yes, Chip, on the X position, those are also in January, because that's given me kind of the happy medium between about 113 days now, where the Delta 20s are, let me see what they're trading for at the moment. So those January calls are trading for 55 cents. So I felt like they were cheap enough that it warrants taking that out in January. And I like those positions where you can kind of sit on your hands and just let your idea play out. So we'll see what comes of that over the next several months. So that all looks pretty good so far, guys. Everything is kind of going along to plan. Now ticks have pulled back to a negative value, so we do want to kind of be a little bit cautious here. But the fact that we've cleared 1695, like I said, that was kind of giving us our bullish expectation for today, and so far it continues to play out. Netflix is getting a gentle pullback here, so let's watch it back around 308. Amazon quickly approaching our targets. If I come over to my monitor tab, that spread is still holding a good chunk of its premium, which is kind of frustrating. You'd like to see it get closer to being worthless. But that's been a pretty decent move this week, so I don't want to get too greedy with that one. I also like the idea of taking it off, and then you don't have to worry about the rest of it into tomorrow. You're just kind of clearing off the things that are working out for you, managing what you have to, and we'll go from there. So far, all of that looks good. Let's continue to look at some new opportunities here, and I'll take some of these questions as well. And then Daniel, to grow a small account percentage-wise, how much risk is appropriate to have in something like Delta 20 options at one time? Well, Daniel, that's the hard thing to suggest because it really comes down to your personality. I mean, how much do you want to allocate to it? I like to think it's a good idea to keep a chunk of your account in cash, especially if you're working a small account because you don't want to lose the whole thing over anything. So I'd say maybe somewhere around 30%, give or take, but that is definitely still a personal preference and what your goals for the account are. So most of the quick managing that I had to do here has already been done. Everything that John put on, we've talked about that in relation to Baidu. Facebook, you guys know what's going on with that. So plenty of trades that have been taken. A lot of them are doing just fine. Let's take a quick look at TRIP. TRIP is one that I was not filled in yesterday for the position that John was working with the sale of the put credit spread. This morning we're up 47 cents. And for me with TRIP, I would actually be a little bit more biased to the long side. Now, as John pointed out, the market is a little iffy, right? We're not sure if the S&Ps were going to pull back. We had that big, long discussion. I look at the S&Ps and say, as long as we hold that 1684 level, which was daily symmetry, everything looks okay, and TRIP in itself looks good too. Now, remember, these moving averages I was using on a intraday chart, so it's the 8 and 34. If instead I break this down and I want to analyze it from a swing perspective, well, then I'm going to come back and focus more on the 21 EMA. So if I throw that on the chart and I zoom in here, I can say, well, assuming that the daily squeeze is going to fire long, that means I would want to have my stops back here, back below 73.94. Now I can also see that the squeeze histogram has kind of been moving lower here. What you really want to see is that the black bars come back into play, letting you know that the bullish momentum is still well intact. So, a couple of things too. You say, well, what is your perspective, or your time frame for the trade? Since there's a daily squeeze in play, well, and also since TRIP does not have weeklies, well, then that makes it a pretty easy decision. You drop this back down into your single strike options. Your Delta 70s are going to run you about $4.30. So those are not cheap options, but it does fit the technical setup pretty well. What I would do here is either, the put credit spread's fine. That is definitely a safer way to play it, and if the squeeze does fire in your favor, you'll be able to collect the premium on that. But I also think it's a good place where if you wanted to buy one of the 72 half calls and then buy another if it pulls back down into those moving averages, that's a perfectly fine way to play that one. So I do like that there in TRIP. I think that's a perfectly fine position to consider. I just don't have anything on it at the moment. So there again, I kind of do like to keep tabs on some of these. TRIP will be one that if it starts to reverse, meaning the daily squeeze momentum turns back to the bullish side of things, then I'll be more aggressive about getting into that one. Cena also fit the same bill. So for Cena, we talked about how I didn't want to buy this one yesterday because it was up almost 4%. So on those strong type days, I try to avoid buying call options because you just don't have an edge. Well, today it's down a little bit weaker, and it's the same thing. Notice how the squeeze histogram is moving from a higher to lower. So this, of course, is still a daily chart, so keep that in mind. But here the momentum is rolling down. I would still go with the bullish side of this trade because you've been holding the 21 EMA. But if you're trying to time your entries, it will usually, it's a fine line because you may miss it. It may gap up on the day that momentum reverses, and then you just don't really have the opportunity to get in. For me, right now, I've got enough bullish exposure that I'm okay to wait on this one. So for me, with Cena, if that can start to flip to the upside, I think that's a great opportunity to come in and look at buying directional calls. The reason I would look at directional calls there is because you also have a monthly squeeze that has fired long. It's also a situation where you've got the fire line right here around 80 that has been providing a nice area of support, and you'll have a very clean 1272 extension up into about $90 or so. So definitely do like that setup there in Cena. It would just be a little better if you saw a reversal of the momentum. So Netflix here is really starting to kind of get it done. Throughout this pullback, it's been very mild. Remember, the reason that I am still very interested in playing Netflix is because you have some bigger time frame squeezes in play here, all the way down to the 4-hour chart. I like trying to work those weeklies because it's something where, it's just a quick overnight profit, which is always great when you can get it. But what if we consider some options that are a little further out? Since I have a 4-hour squeeze, I can give myself a little bit longer perspective on how long I want to hold those. So I drop this back down and I'm looking at the October options. Here I can see the 310, 305 is trading closer to about $2.10. That is much more attractive to me because when you take in a $2.10 credit, then you can really say, okay, my risk is defined by the width of the spread, and you're getting closer to a 1-to-1 risk-reward ratio. So I do like the position there in Netflix here. Again, I don't think there is anything wrong with trading a little bit lighter size. That way, one, you give yourself the opportunity to add into it if it does pull back, and then two, if we're just wrong on the entire thing and the market does end up having, kind of this massive flood, whatever you want to call it, there's reasons why, kind of like in last night's video, John talked about the potential for a decline. If that does happen, well, then you're not in here with your whole account size, taking all that heat. I think it's perfectly fine because then you still get to participate in the move. You don't have as much risk, and I like that just fine. So I'm looking at the 310, 305. I want to sell 2 of those put credit spreads. Of course, if I sell it at $2, that's going to give me $3 of risk on the spread. And of course, you'd say, well, isn't that a little close to being at the money? It is. But the reason I'm doing it is because off all those various squeezes, I think we're going to be able to make it move back up into the snow line, the tree line at 317, and that those squeezes would continue to propel us higher. So let me pop this chain out one more time. Google doing well, Amazon doing well. Tesla's a little lackluster here, so we'll come back and revisit that one. But I'm going to start selling these, the 310, 305, on next Friday's expiration. And Sim asks a perfect question, and I'm glad you led me into that, because he says, I thought it was better to sell weeklies from the Tuesday of the expiration week. So what Sim is saying is, why would you sell it now instead of just waiting until next Tuesday because of the way the premium works and everything else? You're exactly right on that thought process, Sim. The reason I'm going to get into it now is because of all the different squeezes. Because if those moves do end up being propelled off of that volatility squeeze, it's not going to matter so much. So here it's just an example of why I've got a clean signal. I'm willing to take it because of that, but you are right on that explanation. And also keep in mind that I'm taking a half-size position, so if it pulled back, I'd have the opportunity to add into it. So, like I said, I'm going to start off by selling 2. That gives me a lot of leniency to work the position and also a great way to talk about how these trades are working. I can see that I've got a wide bid-ask spread here of about 50 cents. So let's see what the actual last fill was. 205 is what people are actually getting. So I'm going to go ahead and kind of join in at those levels. And I will post this one for you guys. Like I said, I won't be texting this one out either because it is something that I'll be scaling into. And like I said, I like taking more trades in the chat room, but doing a whole lot via text can get a little confusing. So we will just keep that one confined to managing here in the chat. So far Amazon is doing great. It's right up against that snow line. Like I said, if right now the spread is trading for 20 cents, so it's getting down closer to that order we've got out there sitting at 15. Hopefully will be filled here in the relatively near future. S&P is trying to hold the breakout zone. Tesla's still a little weak here, so we broke out. We fell just a little shy of those targets. Still not a bad place to start peeling off some of those that are going to be expiring much sooner. So I'm going to look to do that real quick because I just don't want to get too cute with those. Of course, for the put credit spread we've got out in next week, those are still doing fine. So far so good on all of those. I was filled the Netflix, Google. The 5-minute squeeze is now confirmed long. Remember, in order to know that a squeeze has actually fired, you want to see whatever time frame you're on, that bar needs to close. Because a lot of times you'll see the squeeze will kind of flicker off and on, and that's because it's deciding intra-bar what that relationship of the Bollinger Bands and Keltner channels are. Once the bar closes, then you can say definitively, yeah, that squeeze fired, and it's a signal that you can rely on at that point. And then Tracy asks, did you look at MasterCard yesterday when the 1-hour squeeze fired? If so, did you take the trade? Why or why not? I did not look at MasterCard, and it was mainly just because we've got so many other positions on that I've been managing, and it wasn't one that I found to be especially attractive because it was so extended. So if we come back over to the hourly chart and just kind of check the signal here, I would have, that's a tough situation because I would have argued that, yeah, you pull back down into this fire line of support, that's typically a good level. The squeeze momentum is moving higher. That all looks like a decent setup off the hourly chart. The only problem is just that daily is so extended. So if we maximize the grid cell and run the analysis we've done so many times before, we're just looking at the decline that led into that massive rally. So I can see that those levels come from this high, roughly, down into this low. And I've got to make sure I can see all of my price data to run these levels accurately. So I kind of drag and adjust to where I can see those. I run from the high to low to see what this decline was like, and then compare it to the current decline. And if that isn't enough to make like a profound impact on your trading, I don't know what is. But you look at this decline and this decline, that level gives you 671.01, and the low from yesterday was 671.74. So very symmetrical levels there in MasterCard. Based off the hourly squeeze, I can see why you'd take it long, and it just didn't work out. So, things like that may happen, but I do think we're on top of some pretty important support right here. Not anything that I really see as far as a new clean setup, but it is always so fascinating to look at the way symmetry works in these markets. And then would you put a stop to buy on the credit spread? Now, Terry, if you're talking about that like for Google or Netflix, for Google, remember I do have stops on this on a break of 875.68. Those are not hard stops. Basically just saying, I placed the order, I'm sitting here managing it in real time. Now, if you had to leave or whatever the case may be, then that would make more sense to go ahead and get your stops in there and working. Since I can sit here and manage the position, I can do that a little bit more leniently, and I don't have to worry about that as much. So as we're sitting here right here on Amazon, let's spend a second managing this one because remember we use theoretical price to try and estimate that we'd be getting out around 15 cents if we got up into those targets. Well, as it works out, we're at those levels and the spread is actually trading a little bit higher. So it's holding a lot of that premium. But what I don't want to get into is a situation where you have the big decline off this level again and then we're trying to have to kind of manage it. Is there a good chance this will expire worthless? Absolutely. But instead of trying to, guess about that, we've got a good profit, so I'm going to go ahead and close this position out. Same idea. I arranged this position by order. When I do that, that means if I come over to the left and I create the closing order, it will automatically put me on the correct side of this. I can also see that by flipping the bid-ask spread, this is currently sitting at 17 by 23 cents, so I'm going to try and get out of that one at 20. That, of course, will cancel the current order that I have sitting there working. So we'll give that just a couple of seconds to see if I can get filled, and then, of course, I will share that with you guys. And then the Netflix that you sold is not one standard deviation out, as JC recommends. Barry, remember, JC recommends a lot of things, and a lot of different positions will stem off different signals. So I was more comfortable taking a higher credit with a better risk-reward because there's a 4-hour squeeze forming. I also did these in the contracts that are expiring next Friday. If you wanted to add some more safety to your position, sure, you could go further out. But remember, the further you go out like that, you are taking on more risk because you're taking in less of a credit. So there's 1,000 ways to look at those. I am perfectly fine being more aggressive with it because of the fact that I'm out into next week. And I took a partial size position too. Remember, we were looking for the pullback for the best chance to get into those. It's starting to get that now, but it's all about, kind of managing your expectations with your expiration. But that's not a bad question. And then when you have a chance, how did you bring the position window into the view at the bottom of the trade tab? Scott, that's one of those things that I was saying, it looks like it's hidden, but it's always been there, and it's just a really useful way of getting into it. So like for Amazon, right now I'm just looking at the option chain. If you collapse all of the different chains, you'll notice down here at the bottom, here in the very bottom left, you've got a small little drop-down arrow that's labeled position. So if you just click that drop-down, and here I can notice that I have no quantity in this one, so I have been filled in that Amazon position. Now, of course, if it just keeps on ripping higher, then we would have got that 15 cents, and it may even expire worthless. Remember, I'm focusing on taking a lot of this risk off the table, and, when you've got good opportunities like this, I like taking them. I just didn't want to be another situation where how perfectly it held last time, and then tomorrow we're sitting here having to sweat Facebook saying, sweat Amazon saying, all right, where is it going to hold up, this and that. It just gives you a lot more mental resources to focus on other opportunities because that one is off the table. So this order was, I believe, was texted out. So I'm going to go ahead and set this up to close and filled. Okay. Oh, and that's a very good point too, John. Thank you for pointing that out. So Scott, to kind of follow up on your question, that will only show up if you actually have a position. And I think that's a good point because if you don't see it, you're going to think, well, why is it not showing up? And that's because you don't actually have a trade on. So thanks for that, John. And then what do you think about the S&P reaching 1715 tomorrow? I think that would be a little wild, but the market in general has been a little wild lately. So I try to do the best I can to not never say never, I guess is the best way to say it. That would be a huge rally from here, but based off the action I've seen this morning, there's no reason to try and short this. So, ticks come back to negative 600. This is where you can also say, okay, I saw that the ticks pulled back. Do I need to be concerned about more of a drastic sell-off in the scope of this decline? Well, that's where you come back and reference your volume spread and say, well, the immediate kind of heartbeat of the market took a little bit of a pause. But number one, negative 600 is not really bearish. I kind of consider all of this to be noise. But the vol spread never looked back. You can see it still has this nice blue coloring of the bars, letting you know that there's still bullish momentum behind it. And everything about the volume coming into the S&P still looks positive. So that's how you can use the two of those together to know whether or not these pullbacks are more serious. Perfect. Yeah. Thanks, guys. Like I said, for Clay, absolutely still in triple D. I didn't have it in focus here because it's a little bit more of a long-term play. Remember, the only thing I have right now in triple D is the October call options and the January call options. We took profits on the first part of it when we hit the 1272 extension. There was a perfect confluence with the snow line. Then we're looking for the last part of this. I'm really giving it some room, and that's because we've got a daily squeeze backing us, and I'd like to see if we can get the 60.53 level before expiration. So giving that one plenty of time. I've taken my profits in Amazon, so we're done with that one. Tesla is still kind of just hanging out here, not real sure what it wants to do yet. The put credit spread that we sold out in next week's contracts is down to $1.16. So you can still hold on to that one. If we come back down and see the hourly squeeze, the hourly squeeze is 3 bars in. So I'd like to see that we can get a little bit more strength out of that one. Let's see how it is in the next, kind of as we head into the afternoon. Of course, we'll have one more day of decay into tomorrow. Then we can decide if we want to continue holding that one over the weekend. Gotcha, Gan. Yep, it's all about those kind of situations and then learning from them. I think it was you that we talked about how you had that it happened to you on CMG, so you can approach that either as a learning experience or you can be all down on yourself and everything else. You took it as a learning experience, applied it to this situation in Amazon, and that's perfect. So definitely like to hear that kind of that you're making those changes, because that's what it's about. Getting better. Couple of questions here on a possible elephant trade in AMBA. So of course, remember, for elephant style plays, we're just saying it's an elephant play because it's a big play, or it's something where we are considering these delta 20 out of the money call options. We've got a nice weekly squeeze forming. Don't have enough data for a monthly to even populate. But then off the daily, you're a little extended here. If you just run the most recent high to low. So from here to here, you can see you've already made several extensions. So I completely agree that AMBA looks good from a long-term perspective. But since I've already got a good chunk of bullish exposure on, I'm going to kind of hold off on AMBA, see if we can get a little bit more of a pullback, and then I think there may be some better opportunity there at a better price. Let's take a look at Baidu, because it had been very strong, and then I saw that it was a little quiet today. As we pointed out, we have the put credit spread on here where we had sold the 148 strike, and that is still doing perfectly fine. Now, would I add into it here? No, because you're right up against the snow line, which has kind of been, fighting us so far. Right now, the position we sold it for 32 cents, and it's trading at 14. So I'm going to try to let that one expire. Of course, I'd like to see that this skyline holds on the way back. But for me, I would basically just say that Baidu is, we're in a good spot, and there's nothing to do with it differently than what we've already done. Amazon's still holding that level very closely as well. The January calls that I have in Triple D, I'm working the $70 calls. So, like I said, those are still a good distance out of the money, but I will be very interested to see where that stock winds up in January's expiration. Google getting a little bit of a pullback, that's perfectly fine. Remember, all we need to see is that these lows hold. So if that cluster that was created back at 875 is good, then we'll have time decay in our favor. Our put that we sold is just outside of the money, and we can try and let that decay work for us overnight. And then, Ken, do you normally talk this long in the chat room in the mornings? Yes, Ken, I do. So the morning session, I usually run from about 8:20 to 10. So it's a good hour and 40 minutes. Then Carolyn will come on, and she'll go anywhere for, 30 minutes to an hour, sometimes less. Just kind of depends on what her setups are showing. The work that she does is a little bit more precise and kind of detailed. So she'll get a lot of that stuff ready, presented in the morning, and it just depends on how many things she wants to talk about. And then John will do the close. And then could you please repeat the relation of the ticks and the vol spread? Sure, KJ. Just remember that the ticks are the shares that are on the uptick, meaning they're being bought, versus those on the downtick on the NYSE. So that's kind of a much, that's why I've got this on a 1-minute chart, because it's a very real-time type analysis of, how much buying is going on versus how much selling is going on. The vol spread takes the stocks that are up on the day, it takes their volume, and then subtracts the volume from stocks that are down on the day, and then that gives you this reading. So if things are very bullish and continue moving higher, the thing you especially want to pay attention to with the vol spread are these massive trending days. So when things like this just collapse, that means that strong volume is being dumped. And then, of course, the exact same thing on the rally side. This was kind of after this bar here was after the FOMC announcement last week. And you can see how much of a massive difference that kind of stuff makes. So it's a really good indicator to know whether there's, how much fuel is behind a given rally or a given decline. If it's just sideways, well, then it's really just kind of choppy. But if you really start to see a big defined trend there, you can have a better opinion of what the market will do into the end of the day. Also notice how those highs and lows that we put in the vol spread, we stayed inside those into the close, and the close ended up being kind of a, boring sideways close. So I'll delete those. We'll do the same thing again this afternoon when we come in to look at the close. And that's exactly right, Dan. The S&P, or the vol spread is the S&P. The tick is the NYSE. And there's absolutely a way to put a stop on credit spreads. We've got some videos on the site that will detail how you can do that. And then Tommy, that text subscription is to our gold members on the site. I can't really, of course I can't show you what they would look like because it would just show up on your phone, but you're essentially getting the exact same information that we post up here into these presenter posts. So when we take a trade, we post it to here. If it's something we want to alert members about through the text message service, then of course it'll go through there as well. And it just comes through as a very basic text, bought here, sold here, etc. And Natalia, yes, we absolutely have a lot of information on conditional orders as well. Thinkorswim is a great platform for executing conditional orders, and we've got a lot of information on that. And then Peter, my targets for X and NVIDIA are I would like to try and make 5 times my initial investment on the contracts, and then you can trail it up from there. Sometimes this can work out really well, and you can get stronger than a 5 times return on it. But that's where I like to start out. And then Neil asks, can you please show how you did the theoretical pricing on the verticals on the option chain? I'm not seeing that on TOS. Absolutely. Let's take a look at it. And we can kind of, let's say, Google's not the best case because our targets up there at 896 would be a little lofty. Let's take a look at Netflix. So the question was, just can you talk a little bit more about theoretical pricing and how we can relate our spreads to it? And Netflix would be a perfect case for that because, remember, I'm watching this trying to say if it pulls back further, then I'll have an opportunity to add into these contracts. If I wanted to try and estimate what that price would be, well, let's just go ahead and use the 618 as a level to use this off of. So I bring this up, and I'll just kind of show you guys step by step exactly how you calculate it. So I would say right now we're trading at 310.55. If I subtract the 618 retracement, which is 308.84, that gives me a difference of $1.71. Knowing that value, I then come back into my Netflix option chain. The thing you want to look for here is in this layout drop-down, you've got several different predefined options. You want to flip back over to Theo, Price, and Mark. Once you do that, then you're going to have these fields that populate just below your option spreads, or below where the spread is, what kind of spread you're actually looking at. If you want to reset this, of course, that gets it back to the defaults. Using today's date, if the stock was to decline that $1.71, that would bring us down into the 618 retracement, and then I would assume that that 310 put credit spread is trading closer to about $2.34. So that's a very useful tool. I like using that for targets, stops, trying to figure out where a spread might be trading for when you get to a level that you want to get into it. So a very useful tool, and you can just find that there in the layout drop-down of thinkorswim. Amazon doing great here. Just made quick work of that 318 level, so next targets on that one are 322. Looks pretty solid at the moment. Netflix, we're watching for that next pullback. Vol spread is at the highs of the day, so I consider this tick pullback to be very mild in relation to it. We'll put Tesla's back down to a little bit smaller time frame chart to keep an eye on it. And then do we exit the Tesla credit spread? It looks like it's pulling back. Well, it's pulling back very gently. Remember, we sold, in this case, we sold the 180, 175. So for now, I'm still giving Tesla a little bit of time. Remember, the reason I am is because we've got an hourly squeeze that's fired long. It's 3 bars into it. So usually we're looking for about 6 to 8 bars of strength out of that. That's why I'm going to give this a little more time in the afternoon just to see if it can hold up. We sold it for $2. It's trading for $1.22, so we've got a little bit of cushion there that we can kind of work with. If this thing really does start to break down into the end of the day, well, then we'll bail on it. But right now, it's still a very modest pullback. We didn't quite get the gap fill this morning, so we'll give it a little bit of room against those levels, but still one of my favorite stocks. And then Jai asks, what's the neutral range for the vol spread that you would consider as noise? Well, the vol spread I don't follow as much of a range as I do with the ticks. I more just kind of look at it in relation to the trend. So if you see that it's just sitting here, and you'll also notice that that's why the only level I have on this chart is 0. That's because I'm more just kind of looking to see, is this a big trend that's actually showing me strong, big volume buying, or is it more just wrapped around 0? So I'm looking for a trend or how it acts in relation to 0. If it stays wrapped around 0, then there's not a lot of conviction going on. If instead you've got a nice, clear, defined trend, then you get a better feel for where the market should be moving. And then, John, I wrote down the rules for SanDisk and NVIDIA, but I didn't understand how you found these and the trigger. Well, I found them by just scanning through weekly squeezes, which, of course, that's just, the indicator is built into thinkorswim. There's a couple different ways you can scan for it. I just found the weekly squeezes on those charts because it's some that I had been reviewing. And then I used the hourly, and in the case of SanDisk, I got a little more aggressive using the 30-minute, 8, and 34 moving average crossover. There again on that, keep in mind that it's such a broad play that you can use a couple different things to trigger you into it. The 8 and 34 is nice because then at least you're giving yourself a chance to, not just buy it and keep riding it all the way down. That moving average crossover on the hourly chart is a good swing time frame trigger, and that's the reason why I use those moving averages. And then, Larry, would you please discuss the confluence of fib retracements that you discussed yesterday? Absolutely. The next one that I find, there's a good example of that. I will be happy to look at that for you. And it might even make sense to run it real quick on the S&Ps. So let's open up the S&Ps here. Currently, I've got this on a 5-minute chart. So if I was looking at this from the most recent swing high to low, let's run that real quick. And let's take this level here. And that's breaking down through the 618 retracement. So there's definitely some selling that's hit here, guys. I mean, I really like the way things acted first thing this morning, but now that you're coming back through those retracement levels and you're also breaking symmetry, this is very significant selling. So, In light of that, is there anything that I need to change with my positions? Well, we know that we've got to keep an eye on Google. It's acted well against 875 to start with, but if that breaks, it's going to be time to start getting out of those put credit spreads. For Netflix, I've given myself time out into next Friday, so there's really nothing I have to be concerned with this one for now, and I'm going to be very patient on adding into the remaining half. For BIDU, this one I'm going to try to let it expire worthless since it was a relatively small credit when it was initially taken in. If we take out 149, you can see how 149.27 is the skyline. You couple that with the most recent lows that are here at 149.63. So as long as BIDU holds that, we're good on the put credit spread there. Amazon, of course, we've already taken profits. Tesla, where we sold the 180 puts, so we're giving that time into the afternoon to see how the hourly squeeze works out. And then Mac, I just got filled on the Google spread. This is the first time I waited instead of chasing. That's awesome, Mac. I'm glad to hear that. And this really shows you the idea where, when it's going, you kind of get the feeling of like, man, it's just going to leave without me. But then, you pull right back into the zone and you get a great fill. So I like that. And that doesn't necessarily mean that the trade's going to work out. Remember, we've got to see that the lows hold. But we at least know that there were good buyers back in here yesterday, and it gives us a level to focus on today. We took a 5-minute trigger to get into the trade, and that's just one way to look at those smaller intraday type moves. And then Don, on the Amazon 310, 305, I am out. I am flat in Amazon, and we took profits at the snow line. Yeah, this was pretty wild, guys. I mean, right as I get done talking about how the strength of the vol spread gives me this bullish opinion, well, then you get a negative 1,000 tick reading. That is very serious. And that's why I've gone into so many of these positions with light size, because I want to act off what I've seen. But I know that there's the potential for some radical moves the week after quadruple witching, and that's why you just really want to make sure your risk is defined with every position you put on today. And Daryl, that strategy that you're talking about with selling the puts and buying the calls, I still love that strategy. It's just not something I've used a lot this week because the market has not been especially clean. So if I see some more of those that I'm setting up, I will definitely let you know. I love the way the play has been working out recently, but it's just not something that I've seen set up a lot today. Ticks have not been above 0 all session. Justin, what are you talking about? Because the ticks have had really nice moves back up above 1,000 all day. So I don't know what you're talking about. And then Luca asks, do you expect the ticks to get back up to 600? I have 0 expectations for the ticks. Remember, I just let to try and force your will upon the market is an exercise in futility. I mean, there is no point in trying to do that. So I would like to see that they get back up there, but I am not, making any. I guess all I can say about that, Lucas, is you're asking the wrong question. Very cool. And Blue Flash also notes that I've learned to have more patience since I've been on this site also, and that's awesome, guys. And kind of in relation to those statements and the kind of trading we've been doing over the past couple of days, do not feel like you have to take every trade that we discuss. I know a lot of the things that we put on are just kind of to show you the benefit of these weekly options, especially with some of these that I'm working with small size. If you don't like the trade or you're trying to work a smaller account, really try and pick and choose the ones that really fit you the best. And I think that's a great way to, try and finesse some patience into the better setups. And that's a great way of looking at it. I'm really surprised you can't get out of that at 20 cents, Ken. I mean, it's been trading, I got out at 20 cents before it even had that push. So you should definitely be able to get out of it. Of course, if you bump it up to something like 22 cents, it may be a little bit, maybe a little different. And then, Cool Kid, how do we handle the Netflix 310, 305? Remember, this spread, the risk is defined by the width of the spread, so there is not a thing in the world to do with it right now. We've got the pullback down into the 50% retracement that we were looking for this morning. I would like to see that the 618 holds, but that is still a perfectly fine position, and I'm not touching anything with it. And then, Max, I did close out my weekly calls on Tesla just because those are they're so close to expiring. It is not something that I want to really mess with. Now, John also opened some that are out in next week's expiration, and I do still hold those. It's all about your theta decay. So knowing that those weeklies were going to have the most impact, we got a gap up this morning, which is all I was really looking for. You made a new all-time high yesterday. You got an hourly and a daily squeeze, and then that's why I was willing to kind of take that risk. So you get the overnight pop. That's all I'm looking for out of those immediate expirations. Then the ones that are a little further out, we can give a little more time to see if we're going to be able to make some of these better targets. And today will be really interesting to see how things wind up, guys, because the first, let's call it the first hour of today's session was very bullish. Then over the past 30 minutes, things have really sold off. The vol spread is still positive on the day, but there's some days where I think you can get in here and you've got a really clean opinion of what's going on. Things are pretty cut and dry. That is not today. It started off very strong, but that massive sell-off kind of had me a little, it's something to be concerned about. So we'll see how the end of the day ends up relating. Look how Netflix held the perfect 50% retracement of that move. And then Steven asks in the chat room, if I decide that a stock is going to trade in a certain direction, but I'm not sure what the best way to execute the option, can that be discussed with other members? And we also make suggestions. Yeah, Steven, that's kind of the idea. So I saw that they answered your question there via text, but you're exactly right. And that's the whole reason why we like having a room that can actually communicate with each other. So you can share ideas, get other stocks from other people, and it's really turned out to be a good environment. Facebook was holding up the last I looked at it, Don. I no longer have any exposure in that one. Patricia, I was talking to Daryl about the same thing. I asked him, I was like, because we have a Tesla dealer here in Austin, and I would love to go test drive one. I also think it's really cool for the people that are out in, California, I think they said, where Hertz is going to start renting them. I'd go rent one of those for the weekend just to try it out. And then Alias, the squeezes in Thinkorswim can be found under, just go into your studies and then John Carter Studies. Okay. So you had some politicians' comments that were not too encouraging. Thanks for the heads up on that one, Mark. I mean, that can very well do this kind of stuff to the market. I still don't listen to that stuff during the day just because, here again, the information that we need to actually act off of is all going to be seen in the charts. I'd really like to see that of course, 1684 is still very important, so I'd like to see that holds for today, but it's definitely given us a little bit of a flush. And then Jack, I do still hold the Google 908.95. I did not take that one, so I believe John sold the calls on that one. And if you sold those calls, you're in good shape because you are, a good almost 20 points out of the money. Then Linda, these questions are really coming by pretty quick. Do you talk about timing, the way the market moves in the day, like the first 45 minutes and the end of the day? I don't know if I completely understand your question on that one, Linda. And then Greg, the 3D printer that we got is actually very reasonably priced, but that is one thing I'm going to be working on. It's kind of a long story, but ask me about that tomorrow and maybe we can talk about it more. Oh wow, rental is $500 for a day on the Teslas. Maybe I could convince Daryl to split it with me. I just think they're awesome cars, and obviously I love to see Tesla getting some recognition because he didn't get a whole lot of it during his lifetime. Okay, yeah, and I apologize if I'm not able to get to every question this morning, guys. I do have quite a few that's coming through, so I'm trying to pick some of the best ones that kind of correspond to what we're looking at, and then I can kind of update you guys on it. It's always interesting, too, to think, okay, so these political statements came out and they gave us the big flush down into 1,000. Do they stay sustained at negative 1,000, or is it shaken off, and then we kind of resume back to what we were doing? So far, it looks like we're going to try to get a resumption back underway. And then can you talk about how to set up your stop loss when you have a setup on a credit spread? Absolutely, Tommy, and it's exactly the same way as we calculated theoretical price before. So let's say, for example, in Google, we can see that we're trading 875.68, or the stop, the lows are back there at 868. So that's going to be about $2.20 difference from where we're currently trading. So I would bring this option chain over. We're looking at Google. And you want to drop this back down to the vertical that you're currently in. Now we've sold the 875.870. I reset the theoretical price on this, and we're going to use today's prices because we're analyzing stops for today. And then we're going to use a minus $2.20 because we want to find out what the spread would be trading at if the stock had a $2.20 decline. I can see that that would theoretically take this price down to about a mid price of $1.70. So I always like to give myself a little bit of leniency off of this because remember, when we price this out, we used the exact price of that low along with a rough estimate of where we are currently trading. So once again, remember, it says it in the name. This is theoretical. It is not guaranteed. It is not a certain thing by any means. It just gives you an idea. So if you had to leave for the day or something and you still want to sit here and manage this, I think doing something like even a $2 stop on this is fine. Because we took in this case, about $1.05. So you've got roughly a 1-to-1 risk-reward ratio. You're stepping outside this far enough that you're giving yourself a little bit of leniency against that low. Because if it comes down and just tags the low, well then of course you don't want to get stopped out on that move. But using that low to calculate this price tells you could put your stop right about here. That's much better than risking the $5 and still kind of gives you the chance to participate in Google holding that cluster zone. And then, Ken, I did not do anything else with Netflix right now. The main reason being is because I don't mind having smaller exposure on right now since the market is still kind of in this indecisive zone. It pulled down into the 50% retracement like we were talking about. That's a great place to take your first entry if you haven't taken it because there is the bigger time frame squeezes still in play here. But given the fact that the market is just a little shaky here for the past 30 minutes, I'm not going to start adding into a lot of other things. I can give myself time into the afternoon or even into tomorrow morning since the Netflix play is further out. But I don't feel the need to start adding into a lot of different things right here. More importantly, I'm kind of looking at like Baidu. 149.63 is an important level. You break through that, I really want to be careful watching that 148 put spread. And then BBD. We bought the 3D printer, and I love it. It is the coolest thing that we've had in a while. So let me know how yours turns out. Oh, okay, I got you, Linda. And in relation to that, absolutely. That first chunk of the day and the ending of the day is when you're always going to be the most active. And that's why I try to, get a lot of the positions on that I want to do in the morning. Then I kind of let them ride throughout the day, and then adjust if I need to in the last part of the day. So that's where you'll see that, the market is usually most active as well. And then for Baidu, Carl, I just really want to see that it holds two levels. 149.63 are the previous lows that are very important. Then just below that, you have a skyline at 149.27. It can pull down into those, and the 148 put credit spread will still be okay. But if those levels break, I really want to be cautious with those because if the market does have some kind of massive sell-off, you just don't want to be in something like a $3 wide spread where you took in a 30-cent credit and you just let that go completely against you. That is not the plan. So definitely want to make sure you guys are aware of that stuff too. Now, also for those of you that are in the GoToWebinar room joining us today, Remember, if you've taken these Google trades and like Carolyn or John happens to be presenting while it breaks, you've got to be able to get out of these on your own. So when I come back on, I will definitely let you know what I've done to manage these. But just make sure that you're kind of keeping in mind that you will need to manage some of these on your own. You know the idea behind the trade. Now we just need to see if the market is going to strengthen up or if this is a more significant sell-off.
Then I saw her face. Sounds like the sound check is working. That's more about symmetry than anything. You guys remember what we talked about in the S&P yesterday as far as that 100% projection? I'll show you again. Because we did get a nice move off of it. I just don't care for the fact that right now it's starting to fail. But as far as the immediate decision that you did get a bounce off of, it was all based on symmetry. And that was just taking this prior high to low swing. Let's see, this was 42.5 points, projecting that from the high. Okay, we had other projections also, but this is the one that has held. Oops, Camtasia, let's go. I want to get my pretty lines that, there we go. So I can show you the actual swings that I'm using here. So again, it was this high to low swing, 42.5 points, projected from the recent high. And we didn't get a huge move off of it. Okay, it was 42.5 points versus 42.25. But you did get eventually a 13-point rally off of it. Now, if it comes back down through it, just be aware that there's other support that shows up on both the S&P futures that we're going to be watching in the bigger picture in the background, and also an S&P cash. Actually, the S&P cash chart for some reason is delayed, but that's what we'll be watching in the bigger picture. Okay, as far as the 30-minute chart that I had up, do you remember what we were looking at as far as resistance? Now, this wasn't a perfect hit either, but let's take a look at it. Okay, so 13, remember that we were watching these prior rally swings, and that it would be really important for the market to clear these projections if it was going to continue higher from that support. But the largest projection here was not cleared. That's what came in at the 1698 area. So this low to high swing, 13.5 points. This low to this high, 13 points. Okay? Symmetry is similarity or equality when comparing swings in the same direction. So this is similar. It wasn't equal. Sometimes they're actually equal. Okay? Exactly. So anyway, that's where that resistance came from. So now the question is, with the tug of war, are we going to be able to hold above the support that's showing up nicely on the daily charts? Or are we going to see more to the downside? Okay, and we have parameters on both sides. Again, we're still going to need to clear this area now while holding above the recent low. Otherwise, you start the process all over again. Okay, if we make a new low, then I will project all of these swings from any new low to get the new resistance decision that it would need to clear if the rally is going to resume. Okay, now I'm not sure if that all makes sense to you, but there is a members webinar on symmetry on um, in the members webinars on both sites. So you can go check that out. Also, the one that I did last night, I did actually post the file on Box.com for last night's presentation, but Brian's going to have it streaming on both sites under the members webinars as soon as it gets rendered. Okay, so you'll be able to see that later. That was just pretty much going over a trading plan and some trigger examples, okay, to give you a better idea of how you use the work. Okay, so that's S&P. All right, what about Amazon? This is, you know, if you've been around for a while, then pretty much is going to sound like a broken record, but, you know, Amazon's setup started late August as far as the bigger picture. Since then, it has targeted 322.95. We're close. That's the first target. Now, you could even continue higher beyond that, but typically when you get to the first target, that's when I tell you to, you know, trail up stops a little bit tighter. Why? Because many moves tend to terminate at extensions of prior swings. Okay, we extended this prior swing, and then we had a $34 correction. So that's one of the reasons why I tell you to watch out when you're up at extensions. It doesn't mean that it's definitely going to correct the way that it has in the past, but it means that it is vulnerable, so you want to be aware of that. That's exactly what happened in Triple D, right? We had double extensions in Triple D. We had an extension of this swing, and we had an extension of this swing. But as long as a pullback terminates somewhere above this last low, I'm still going to set this one up on the buy side, since we do have potential to then head towards the next targets. Okay? All right, so that's Amazon. Now remember, yesterday we looked at, oops, let's get this where you can see it. We didn't see a really good pattern yesterday after the initial rally off of the support cluster. You remember we had symmetry, a 50% retracement, and a 1272 extension of that swing. And then you had a nice rally, but we still had a target up at 323.78 off of that last low. So I knew that if it was going to hold, remember this decision, okay? What does this look like? Whoever took the two-step pattern class, you could have run this yourself. Basically, if you took 100% of the first swing down, that gave you 310.08. If you ran the low to the high and extended, there was a 1272 extension around that 310 area. And this is not after the fact, because I gave you this yesterday when we talked about this late in the session. And there's a 786 retracement. So there's your zigzag pattern, or here's the zigzag, with the correct ratios on the pullback to an original setup. Now, again, I don't know if it's definitely going to make the target, but we certainly have had a nice little rally off of that. So here, you would run the target off of this swing also, so that high to low gives you a target of 320.07. And now there's the new decision. The new decision is going to become, you know, you have to continue to do this work as the market unfolds, especially if you're looking at some short-term charts, because every time a new high or low is made, you have to recalculate levels. So in this case, ideally, we're going to want to see a hold above symmetry on a pullback, but more ideally, probably a 618 retracement of the prior swing. That would be more ideal. So, right, let me make sure I'm picking the right low to high here. Okay, low, high. There you go. So I still like Amazon. I'd love to see it make that target that's on the daily chart and the weekly chart at that 322 area. It's actually the same target because it comes from the same swing. Okay, but then here's some other targets you want to be aware of. And this is the support, ideally, that you'd want to hold above if we are going to continue towards that target. Okay, so you actually have multiple setups on this chart. Here was one setup. Here is another setup. Okay, to make money with this work, it's setup plus trigger equals trade entry, and then you manage it. So if you don't understand what that means, please go watch the video that, well, it is already uploaded on box.com, but if you want to wait for it to be streaming, it'll probably be up by the end of the trading day. Okay, so that's Amazon, still bullish. All right, let's take a look at a few of the others here. Now, Cena is definitely still a bullish setup, but notice how the markets respect these hurdles. Okay, I'm just going to run it again real quick just to show you where it came from. But here, again, here's the setup. Here's the target, where not quite halfway there. Well, actually, I don't know what percentage we are, but we know that there's a big hurdle that we need to clear if we're going to get through it. And the first hurdle comes from taking the prior low to high swing and projecting 100% from the low. That's what gave you the 83.49. And then you run the retracement of the high to low, and there's the 618 that comes in just above that. Now, I'm not sure if we went through the 786 of this smaller swing, because that would be my assumption, because it's gone. Oh, nope, I'm wrong. Okay, here we go. Yep, there's a 7862 of this high to this low. All right, so we have three levels. I actually have to edit in this. This is what happens when you do so many charts. 83.32 to 83.72 is basically a 618 retracement, a 786 retracement, and a 100% projection of this prior rally swing. So again, if you were playing this really tight, you might have tightened up your stops when it couldn't get through this resistance. You might go back in if it clears it. Or you might still be risking against this last low. However you want to do it is okay by me. I'm just giving you the levels that you can place some bets against. Okay? If you also take this prior larger rally swing and project from the low, that's where you're getting that second hurdle. But the most important one is this first one, the 83.32 to 83.72. Okay, so what else can you do with this? Well, we know that there's time and price at this last low. There's the timing, there's the price. So if the last low is any good, then a pullback to it should hold. So we can also look at the pullback. So let's see. Okay, I'm just going to run the retracement of the larger swing and see if it overlaps. I don't think I'm going to have any symmetry to work with here, except maybe here. And then I'll try and run I'll run the retracement of the smaller low to high swing. You have some levels to keep an eye on. I don't want to clutter up the chart too much here, but I would say ideally you'd want to see it hold somewhere above the 79.43 to 80.80 area. if it's going to resume the rally and push through that resistance. But you can see how this information should be able to help you trade, especially if you're short-term oriented. Okay, you know that this is a big hurdle. Can't get through it. Not yet anyway. So we have to be prepared to look at the alternate scenario, which would be instead of this pulling back and then heading towards the target, the alternate scenario would be that it goes like this and extends to the downside. Okay? So this was a decision and this was a decision. There's a lot of stuff that you can do with this work as far as following up and helping you manage a trade once you get involved. All right, so let's make sure I don't muck up this chart here. Okay, so that's what's going on with CINA. I'm going to get rid of these little ones in the middle because I gave you this zone of 79.43 to 80.80. That's why I don't have to type in the exact levels there, but you know the general area that we should hold above if we're going to continue higher. You can also go down to a lower time frame chart and get more information off of that lower time frame chart because there are more swings to work with. I'm not sure if I'm going to have time to do that, but I might look at that if we do. Okay, how about Apple? Nothing's changed in Apple as far as the daily chart's concerned. If I can find it. Yeah, daily chart still shows, actually I'm going to get rid of some of this stuff and redo timing. Okay, the last major setup was the time and price. Still has potential to 531.83. So far you've had a nice move here. If this last low is any good, then we should hold on a pullback to it. So that's where I've been setting you up here on the 15-minute chart. Now, I don't know if we're going to make the target, but I do know I have a setup. Okay, you should remember this from yesterday. What we looked at was there's definitely support here. That was the area. But check this out. $14.30 versus $14.04. That's where one of the projections came from. This swing projected from the next high. Double bottom had a little bit of a rally. If that last low is any good, it should target 501.12. That will be the target off of this setup. Okay? So now that it's pulling back, okay, we had a nice little bounce, where should it hold? Again, more work to be done. Okay, now maybe you'll get a little bit of a better understanding of how much work has to be done to keep up a market properly. Okay, so I can run the symmetry. We're slightly through this, and then run the retracements. And we'll say that if this last low is any good, yeah, a little double bottom, and then you took out the middle high. Ideally, I'd like to see it hold above the 618, but at least the 786 got a little bit of a gap to fill there, right? Actually, I don't know when a gap is officially filled, so I'm not an expert on the basic technical patterns. So maybe somebody else knows the answer to that question. All I know is that if this last low is any good, we should hold on a pullback to it. I don't like it as much when you retest the actual zone. Sometimes it will hold, but the odds would be lower at that point on a retest. Okay, so let's see if we can hold above this pullback decision in Apple or not. If we can, again, you know what the target's going to be, at least on this time frame. Okay, so that is Apple, which yesterday was crapple. But let's see if we can hold on this pullback today. Okay, how about we went through the setup in Goldman Sachs yesterday. Again, this is a symmetry projection, overlap to 50% retracement, overlap to 1272 extension. You go down to a lower time frame chart, there were even more price relationships that overlapped. Okay, but I'll start looking at setups with a daily chart and sometimes even a weekly chart. So there's the daily, and that's why I brought it down to the lower time frame chart in Goldman yesterday. Okay, and guess what? There were more levels that overlapped. Why? Or why did we find them? Because you can see these swings on the intraday chart that you can add to the analysis that you won't see on the daily. So right now we're still having a tug of war. I have a buy set up against this support. I have a sell set up against this resistance. Okay, my preference, since the daily chart looks good for a potential move towards the 174 area, I prefer the buy setup. You have a choice of waiting to see if it clears this resistance, and then the two charts will be in sync. If it clears the resistance and then you buy the next pullback, or you can just buy against the zone because you know that your risk is defined below there, but it's much safer, a safer bet if you wait for a trigger. I believe so far you've only seen short-term day trading triggers. Last I looked, let me double check now, because again, I don't have time to stare at trigger charts all day long. So let's take a look at it and see. Actually, it doesn't look like the 15-minute chart has triggered yet. You're in a squeeze. If this squeeze fires off to the buy side, it's going to look pretty good. 15-minute chart is the aggressive trigger chart for a swing trade against that support. Haven't done it yet. Okay, so that's what we're looking at in Goldman Sachs. Also, if we do, or if you do take a trade against this support, because you know you could be getting the buy or the day trade signals, your target off of that swing is 172.40. All right, so we're still going to watch Goldman Sachs. Oh, also we had timing at that last low. Now, I'm not always going to have the time to do the timing work on the intraday charts, but it can be done. You can see it right in front of you. We had timing. This histogram represents Fibonacci time cycles. So we had timing hit at the same time that you hit the support. Same thing happened in Cena. You had timing there before or while it was hitting the support. So time and price are good. Now, here comes Google. We had timing yesterday as we initially tested this support. And I think we're close to a second timing cluster here, actually a third. So let's take a look at this. Now, I want to have a little bit more room on Google, so I'm going to get rid of this histogram below. And then, again, I'm going to remind you of where we're at on the daily chart in Google. Or actually, if you remember the bigger picture chart, I think this is what Henry was trying to show you yesterday. We had $82.74 as a decline, and then you had $82.44 as a decline. If this low is any good, we should resume the rally from somewhere above that low and then head towards the target. I don't know if it's going to do that, but I knew this was a bet. This was a setup. Okay, so now we take it down to the lower time frame charts. We're lower than the weekly, and here is, okay, let's check this out. We have time symmetry today. If you just look at this prior high to low swing, that was 5 trading days. You project that from the new high. 5 trading days down is today, the 26th. Okay? Not sure if, when we have small swings in time, I only use the major ratios. So, yeah, that's not going to be very helpful. I'd have to actually go down to a lower time frame chart to run the rest of that timing. But we do have the support decision here. 100% of this, 1272 of that, 50% of that. Looks very similar to the setup in Goldman. As a matter of fact, it's the same exact ratios, right? 50%, 100%, 1272. That is a setup. Question is, has it triggered according to the time frame you were trading? And this is what pisses me off. We made a slight new low. Let me double check that and make sure before I do this work all over again. Okay, so last low was 875.60. Oh no, I'm wrong. Okay, I'm wrong twice today. This is the exact same low, right? Okay, I don't have to recalculate the work then. Typically, if it makes a new low, being the perfectionist that I am, I would run the levels all over again, but it looks like it's actually a double bottom. What we ideally want to see, now you can be a buyer against this zone and risk underneath it, but ideally you would want to see it break the symmetry of this last swing down by taking out these symmetry projections, 883.95 to 884.34. Okay, so a couple different ways you can play this. If you get a buy trigger against this and you get up into this resistance and you can't get through it, GTFO. Or wait for it to be in agreement with the daily work by taking out that resistance and buy the next pullback. Again, your choice. Write up your trading plan and then execute it. All right, so that's what we're looking at. I'm going to get rid of this old resistance. That was just pretty much to show you how it worked in the past. But let's get rid of that old resistance there. And we can watch the battle between the support and the resistance on the 15-minute chart in Google. So all I'm really giving you here is key support and resistance decisions. And then you trade them according to your own trading personality. That's why you're going to write up your own plan. Okay, so we've gone over Google, Apple, Amazon. Man, this chart's getting a little sloppy. I just want to erase some lines. Okay, and we went over Cena, and we went over Goldman Sachs. Okay. Let me see if there's anything else that I'm looking at. Oh yeah, I did say I would show FSLR. I did post this one on box.com. This is one, I believe, that was brought up in the Monday stock picking session a few weeks ago. And guess what? You know, we did have a nice little rally from the support that we found at that time. But you've got to be aware of a couple things here. You're kind of, you kissed the 50 as far as the simple moving average, and the larger pattern is bearish. So you're definitely looking at an uphill battle, and you're looking at a price cluster of resistance. So there are some of you that might want it to continue to rally from this low. If that's going to happen, you've got to blow through this resistance. And if you don't, this is actually a sell zone. And what's left of it is 41.71 to 43.02. I posted the chart on box.com. I'm going to take a quick look at the time of this rally swing. Uh-oh. Okay. This low to this high, 16 trading days. This low to this high, 16 trading days. Now, hopefully you would understand why I would want to tighten up stops if I was long FSLR, because we have time resistance and we have price resistance within a downtrending chart. Okay? And then what else could you do with it? Well, we'll take this down to a lower time frame chart, and I'll give you a couple more decisions before I take any questions. Okay, so chart, the template, all I use on the intraday, 8 and 34. Okay, so the daily chart's at resistance, but if you look at this 30-minute chart, it's still a nice bullish chart, nice pattern of higher highs and higher lows. What are you going to want it to stay above? Prior swing low. What do you want it to hold above? Above symmetry that overlaps any retracements and extensions. So just because we have resistance in FSLR doesn't mean that you have to get out there, but I probably would if it doesn't hold above 38.20. Here's a retracement of that swing. There's also going to be a little bit of an extension of this low to high. Again, the only time I'm really going to do the lower time frame work is to refine an entry or exit, you know, to help manage a setup. Because there's a lot of work involved. So ideally, you want it to hold. There's not one big standout area, but generally you'd say, well, the last ditch support's really 38.78 to 39.52. And I'll post this one on bots. And you want it to hold above 38.20. If you want to look at this as a new setup, you can. But if it takes out 38.20, that's a good GTFO. Also notice that I believe this was an extension. Let me check it. So high to low. Okay, we're just short of an extension there. So FSLR. This is a 30-minute. I will post this on box.com. All right, let me get that chart up. Are there any questions on the charts that I've gone over? I don't do requests. I'm going to give you the FAQ again. I only do Monday stock picking session requests. Those can get posted on my forum. Yeah, I know, Vitamin Man. You know my pain. You're feeling my pain. I post it every single day. It takes a long time to do the analysis on these charts. It's not like you can just pull up a chart and magically the levels appear. So that's why I only do requests in the Monday stock picking session that I do. Nope, I reviewed IBM on the update last night. Yeah, if there's something that you think might be good for a Monday session, you can post it on my forum, and then I'll take a look at it. But we have plenty of charts to work with that are right in front of you, and then the rest of them are on the update. HD was on the update, so I believe it's still holding the support. If it is, then it is still good. I have 6 monitors, but I do not see every single chart in front of me right now. So the rules are, if it holds the zone, you can take a trigger against it. So if you need help with the triggering stuff, as soon as this webinar from last night gets rendered, then it will be up on both sites underneath the members' webinars. I actually haven't looked at rain in a while. I retired that chart. Did it make the targets finally? Yes, go look at a 30-minute chart. We looked at ILMN yesterday. I think that chart's probably still on box.com. Okay, remember that setup from yesterday, time and price? What's the target? 1272, the swing. Now, it had already triggered on some of the lower time frame charts, but it finally triggered on a 30-minute chart, too. So you have the moving average crossover. Look to the left. Did it take out a prior swing high? Yes. Okay, also remember to check out the members' webinars, and especially last night's class, if you need help in understanding triggers and or writing up your own trading plan and how to use this work. Okay, because everybody uses it differently. Some people will swing trade, some people will scalp, and some people will day trade. Now, if I could only find my sound files. We boots on a market, and that's just what they do. One of these days, these boots are gonna walk all over you.
So you should see my charts. Just go into the, for those of you that are in the live room, just go up to the little middle tab there where it says watch, and you can click my charts for the drop down. And I'm looking at Carolyn's charts right now, going through the setups and everything that she looked at. Yeah, Amazon looks good. It's an interesting day. I'll talk a little bit here about the markets and different things that I'm looking at and stuff like that. Yeah, I went to the chiropractor this morning, 7 o'clock. Got an adjustment, slowly but surely. But yeah, the mornings are brutal. It's really tight. So I'm a little nervous. Next week I'm supposed to fly to Chicago, and sitting and driving 10 minutes in a car is like painful. So it'll be interesting being on a plane. As they say, great physical pain brings great mental clarity. Where I live, I'm in Austin. Yeah, it's getting better. I mean, it's gone from being the most painful week of my life to, so that's a 10, to now it's like a 5. So it is on the mend. And it's great motivation for never having that never happen again. Do the daily stretches, do the daily core exercises, every day. Oh God, yeah, when you sneeze or cough, I mean, it hurts like a mother. It's like, no, I don't want to sneeze. You've got some muscles down there that you use when you sneeze. All right, for everybody that's in the open house, welcome. This is kind of a typical week post triple witching, so we've had a fairly volatile day today, which I'll talk about. Chicago. There's actually an options expo in Chicago. It's the money show. They're doing a traders expo there just on options. It's like October 3rd, 4th, and 5th. I'm going to go do some talks there. Stop by Thinkorswim and do a webcast from there, and then all that kind of fun stuff. Oh, interesting. The Carter report. I like that T. Got the cross action going. All right, so what's interesting today, trading against Tom. No, actually, I actually want to see. They're funny. Like TD's funny about bringing in like people that aren't. I don't know. I'd love. We did. Tom and I traded. Tom Sosnoff and I traded against each other live at an expo about 3 years ago or something like that. And that was fun. We get along really well. I like him a lot. Okay, so today, let's take a look here. Now, today's been a little bit more volatile, and this is, I think, a good example of just what we were talking about yesterday. So remember, anything between under plus 600, okay, or below minus 600 is noise, okay? And it does result in mental clarity. I mean, I've been making a list. I call it the shit I no longer want to do list, and it's just like, just stuff like, what, I'm not gonna do this stuff anymore. So it's kind of interesting. Okay, so what's interesting today is, again, we have spent a lot of time in plus or minus 600. Now, we did get some selling pressure here, okay, and you can see that the markets here, I mean, we started off with this huge move higher, and then it tanked, took out the lows. We may have actually, did we fill the gap? We may have gotten close, and now we're kind of going back up again. Now, as a directional trader, if you're sitting there and you're staring at every tick, et cetera, you could catch some moves here. I have found, as I've gotten older, I don't know, in theory wiser, that I don't like playing that game. Okay, if I'm going to catch an up move, I want it to be an up move that's going to last like 3 or 4 days, and we're just not in that environment right now. So, based on the idea that we're in an uncertain environment, what we did yesterday is we focused on putting long positions on stocks that look like they could go up regardless of the market. So one of them was Tesla. Tesla's doing okay today. It's up 1%, and it's poised here. It's got a nice continuation pattern going. We're bullish on all the momentum here, and I'd love to wake up and see Tesla up 10, but if it's up. If it can kind of keep grinding it out here, that's fine, because we bought in the money options that expire next week, right? And then Google has been great. We sold call credit spreads, and Google's just kind of hanging out here. Remember, on the daily chart, Google was bearish. It was underperforming the market. And even today, with the market rallying like a bat out of hell earlier, Google couldn't get anything going, right? Gosh, LinkedIn looks fantastic, so we may have to do something there. Let's look here real quick at the positions. Tesla looks like it wants to break. Let's see. Gosh, I just lost my. I hate it when I lose my train of thought. I was going to grab. Oh, right. Let's look at positions. And I'm not even on meds. Okay. So what we did yesterday was, first we had to put spread on Baidu, okay? So Baidu's up $1. Remember, we sold the 148, 145, and today we're just collecting premium, okay? And it's just, somebody bought the 148 puts yesterday for 48 cents, and now they're crying because it's at 19 cents. They lost $355. We've got our hedge in place in case Baidu would get killed, and their money that they're losing is being siphoned into our account, okay? Facebook, unfortunately, could only get one contract there, but it acts great. Sold the 49, or bought the 49.5 call spread, and only got one contract filled. I think I had like 40 contracts out there, so that's I can get 2 lattes with that, so that's good. Google. So Google, we did the call credit spread. Only got 5 contracts. Google would have to rally all the way to 895 for us to not make money on this trade. Okay, so very clean. Let's see. We did Trip. So Trip, we did the 70-65 put spread. Today it's up 90 cents. Guess what? We're just collecting premium. Okay, and this whole idea of collecting premium. And then on Tesla, now Tesla I went a little bit bigger, but we see, so what we did yesterday is we added the 185, 180 put spread. That's the at-the-money put spread, and you can see here we're getting more money on that because that was a bigger credit. We had the 175, 170 put spread, a nice little premium on that. The directional calls here are really paying off, right? And then I did pick up a few more directional calls. That was just a trade that I liked quite a bit. So obviously I'm keeping an eye on that one and want to manage that one accordingly. What I'm looking for here is to see if, can Tesla, and because those don't expire till the end of next week, is can Tesla make a pop here? Now, I'm concerned. Dun, dun, dun. Okay, here's a good question from Cal. Cal is saying, hey, John, I sold the puts credit spread, the 49.48 half spread that John recommended for 21 cents. It's now 4 cents. Do you think I should get out of it or let them expire tomorrow? I'm concerned I'll get the stock put to me. Okay, so Cal, that's a good question. So first of all, you won't get the stock put to you because it's out of the money. Okay, now, if that makes sense. So if we look here at Facebook, so you sold let me see, you did the 49, okay, so you sold the $49 put. All right, so what you did, let me make sure I got this right. Okay, so you sold the $49 put, right? So now that put, and then you bought the 48 half as protection. Well, now it's almost worthless at 4 cents. Okay. Now you just said, hey, I don't want this to get put to me. Well, the only way it's going to get put to you is if it falls all the way through this. Okay. So that's the first thing you want to understand. And then secondly, it's a good idea and it's a good notion that when you get to 80% of your max profit, you need to have a really good reason to stay in that trade. Okay. Meaning that it's highly unlikely that the stock could come all the way back down to $49 because at this point, you've got 4 cents for an extra. So you're trying to get another 44 cents worth of profit, and you're risking 46 cents to do that, right? So the risk reward is completely screwed there. Now, personally, what I do on stuff like that, this is the rule of thumb that I do on stuff like that. Is now I've got the let's see here. Is that if I'm at least, well, it's kind of a trickier with Facebook because you got the small strikes, but if you're at least 2 strikes away, or better yet, if you're at least 1 standard deviation away, you could go ahead and give it some room, okay? Because if it does expire worthless, you do make a little bit more money, and you have no cost on commissions, okay? Now, heads up on Thinkorswim. If I come over here and say, okay, I want to close this out, and I right-click, and I create closing order, okay, and I'm going to close this out, they're going to charge me commissions on that, okay? But if I right-click, now this is a debit spread, so it's different. But if you just buy back the short side, okay, then you won't get charged for a nickel or less. You won't get charged a commission. So just realize that those are just small things like that. But in general, I mean, I like to let options expire worthless. There's kind of a nice satisfaction in doing that. But you got to balance the risk reward. At this point, I don't see a lot of risk. Even when the market's selling off, Facebook goes higher. Okay, so I just let it expire worthless. Just as long as you understand the risk. You can't get put the stock because it's out of the money. All right. Okay, so good question. So do you have any target for Tesla calls? Now I'm going to take a page out of Carolyn's work here. And Carolyn, I may screw this up, but this is kind of, I do what I call ghetto timing, meaning, well, maybe I'll call it duct tape timing. Because I just look at, Carolyn does this so well that I just look at her work. But, okay, so here's what I did, Carolyn. Actually, here, let me start over. So I'm going to show you what I did, see if this works at all. So what I did on this, and here I'll clean up the, well, that's fine. So I just went and did a trend line. I just looked at the last rally from here, all right, and just kind of where it terminated, and then I'm just going to right click here and get rid of that, and then I can just copy and paste this, or new parallel, and I'm going to put this here at the start of this rally, okay? So then what I have is what I call ghetto price and timing, because I can sit there and say, okay, we've got a target here of $195 that could get hit around October 4th. So is that, now obviously there's no fib clusters here or anything like that, but what I was just looking at is just to get an idea, because we're in new 100% time, okay? So because we're not at, so I'm not using fib clusters, but I'm trying to get a reasonable amount of time that Tesla could make this symmetrical move, because these markets do tend to move symmetrically, okay? There's the move, and they do tend to move symmetrically. And then, so how long would that take? And about to October 4th. And then what I want to do is look at my calendar and say, okay, do the options that I have, do they at least last until October 4th? Yes or no? And so what I do with that, then, it gives me at least a reasonable target. We're at 187. Could we get to 195? Okay. Okay. Cool. It's close, right? So it's not. So this is not anywhere near like as detailed and accurate as what Carolyn will do. But if I'm, in a pinch and I want to get myself something like that, that's what I do. I'll do my shantytown timing scenario. And now here's the thing on something like this: is it doesn't mean, okay, this doesn't mean that Tesla is going to go there, okay? It just means that there's a probability that it'll go there. So one of the things that I'm a huge advocate of is trading in such a way as to continually increase the probability of reward and reduce the probability of risk, okay? Because the reality of it is, and what happens I've found with a lot of people is, and anytime I say, like, you or a lot of people, I'm talking about all the experiences that I had as a beginning trader too. I've made every mistake in the book and lived to tell about it. But what happens is, sometimes, people will buy something like this, and then they have this good move, and, they're up like, let's call it 10K, their account's up like 30%, woohoo! And what happens in something like that, then, if it comes all the way back down, it's not that you got out at break even. You had your account, your account balance is your current net liquidating value, right? So if you start off at 10K, okay, you do a trade like this, and you go to 13K, right? And then suddenly it comes all the way back down to break even, and you get out. You think, oh, well, at least I'm back at break even. No, you just risked 30% of your account on that trade, right? And you don't want to do that. So what I like to do is, as a trade is going my way, is peel some off. So let's say, take off a quarter, and then trail my stop up, because we never know what's going to happen. What if tomorrow, Tesla gets downgraded and it gaps down 30 points? That would suck. Okay, we never know what's going to happen. Now, so anyway, but I mean, obviously Tesla's been in a good uptrend and yada yada yada. So that's that's all well and good. 13, 14, 16, 12, and today 13 days up. Okay. 1, 2, 3. So okay, so Caroline, so do you have your Tesla? Do you have Tesla on your charts? Oh, sweet. Okay. It's 187 September. Okay, got it. Just start. Okay, awesome. So anyway, so that's kind of the nitty-gritty dirt band way to do that. All right, so now there's a lot of interesting things going on here. So let's come back here. All right, so Facebook looks fine. Gosh, there's actually a lot of interesting movement today. And then I'm kind of keeping an eye on Crapple, because so goes if Crapple really starts tanking again, like yesterday, Crapple kind of triggered off some selling as well. All right, so let's look at this. Now, one of the stocks here that really has my eye is LinkedIn. I mean, this stock is just en fuego here. And I love, now I believe, somebody correct me if I'm wrong on this because I'm crammed in here. Is this the all-time high on Netflix right here, around 256-ish? Yeah, exactly, Mavina. That's the kind of stuff that'll happen like that. Okay, so this is the all-time high. So this is the all-time high in LinkedIn right here. So I love setups like this because if this stock is going to take out its all-time high, it has a very high probability of going to its 1272 extension. Okay, from this high to this low, here's the 1272 extension, and guess what? Once you get through the 786 retracement from this high to this low, the chances of this going to the 1272 extension are like 85%. Okay, it's now on its way. So I want, and I wish I would have gotten obviously a position on this yesterday, but I didn't. Okay, now the good thing is about selling premium is that when you sell premium, you're allowed to chase. If you're chasing a stock, don't buy calls because that just puts you in a world of hurt. But if you see a stock that you like and it's running away from you, okay, it's completely fine to chase. Now, these are the iron condors that I have. So what do I mean by chase? I mean just sell a put spread. Expected move is $5. We're at about 255, the 250 put. So the 250, 245, remember, the rule of thumb, one standard deviation out. If you got a $5 wide strike, if you can get a 50-cent credit for it the week of expiration, it's a trade. So that's a trade right there. So that is a safe way to quote-unquote chase a stock. Okay, as it's going, you're selling premium one standard deviation out of the money in the opposite direction of the prevailing trend. Okay, it's a high probability trade. Let me copy and paste that here. So I'm not filled on it yet, but let's see. This is a put spread on LinkedIn that expires tomorrow. All right, so we got that. All right, so okay, so that's LinkedIn. So let's come down here now, and I'm going to look at what I'm looking for here is just are there any other trades here that we can kind of set up, and the idea of what this market can do. Oh, Priceline was the other one that I wanted to look at here. So Priceline. Now you can see Priceline also. Wow, this has been a huge mover here. Priceline is one I actually like to sell put spreads on too. Gosh, it's up $12. So let's come back here and look at the $1,000 strike and see what's going on there. So again, the question we want to ask ourselves here is, if later today the market tanks, is Priceline going to get affected? Well, it's near all-time highs, yada, yada, yada. And what I'm looking at here is on the open interest on the weekly options, is there a high amount of open interest here at the $1,000 strike? And there's not at all. So it's not going to be a magnet. But the question is there premium to sell here? And that's a resounding yes. Okay. Now, it's not quite one standard deviation. Gosh, it might even be interesting to do what would be a butterfly? What would a butterfly look like here? Okay, this isn't bad. I may not do this, but so on the butterfly, you're risking $650 to make $4,300. But the bet is that it's going to go back to 1,000. I'd rather sell a put credit spread for 97 cents. Remember, we're about one standard deviation out. We're getting way more than 50 cents. And Priceline obviously has been on fire. Okay, so I do like that. And I'm going to send that order in. And remember, what we're looking at here is high probability trades. Now, the butterfly has a higher potential reward, but a much lower probability of working out. And because there's no open interest, that's a pure luck play. This is a put credit spread that expires tomorrow. Oh yeah, let's look at REGN. God, that thing's going crazy. Let's see, BIB, is that one up to? Yeah, $2. Okay, that's not bad. REGN. Wow. All right, let's look at that one real quick. All right, so same thing here on REGN. So if we look over here, oops. Wow. That there is called a rally. So and these highs like this just act as magnets. And it's kind of the same thing here. What we can do is just get that 1272 action going. We've gone to the 786, so we've got a target here of $316, and we're at 308. Okay. As premium sellers, as call buyers, that's tricky. What's tricky here is buying a call and hoping it keeps going higher. But if we look at this and say, okay, $7, and we sell the $300, I don't know if we're going to quite get our premium here. That's actually pretty close. 47-cent credit. Let's bump this up to 50 cents, and let's try to get that for 50 cents and see if that thing can come down a little bit. Now, I know we're looking at this and going, ooh, let's buy some calls and see if this thing can keep going, and that's fine, but we'd want to look out to this week, okay? My main priority for today is just focusing on there's so many kind of easy pickings on weekly options from Thursday to Friday that it's really just kind of grabbing that low-hanging fruit and putting that money in our pockets. All right, so that one's working. I'm not really getting filled on anything here yet. I put credit spread on REGN. That expires tomorrow. And then, okay, so we looked at, let's see, ACT. That looks good too. All right, let's come back over here and look at. Nope, not that one. So let's go down through this list of usual suspects here. Okay, so wow, Amazon, nice. Amazon's pretty close to Carolyn's minor target. And remember, when something's close to a target, like what I'm looking at here, guys, from the open house, so Carolyn, her work here, and this is one thing that I like to emphasize, because you can see here that there's a target we're coming up to on Amazon, and a lot of times people will ask, oh, good, now can we sell call credit spreads against that? And I say no, okay? A target does not mean a top, okay? We should get that, put it on a T-shirt. A target does not mean a top. And that could actually go many different ways. But the idea here is that you don't want to step in front of anything, okay? If there's something getting ready to potentially blast through here, why take the risk of selling call spreads? Yeah, it might work, but if you've got momentum going to the upside, just focus on selling put spreads. So just because it goes to a target does not mean it's a top. Just remember that. And it's the same thing on the downside too. Just because something is falling and gets to a target doesn't mean that's the bottom. Okay, it just means that that's a high probability target. And as traders, that's what we're dealing with, is probability. So Netflix is on fire here. Let's take a look at that too. This looks, that looks really good. It's a really nice consolidation pattern there. Let's drill down here a little bit and see what it looks like. Nice squeeze setting up. So Netflix looks good. We'll come back to that one. Gosh, Facebook just cruising as well. IOC. Oh, Sohu. So on Sohu here, this is a pattern that I really like. If we drill down here a little bit, when you get a stock that makes a high, and just think of like the pot at the end of the rainbow. It holds a bunch of gold coins. It's kind of like this. So you come up like you have a rally, and then it's called William O'Neill calls it a cup and handle. But this is and you can think of it as a pot full of gold, because that's essentially what it is. This is one of the most powerful patterns that there is, because it's showing quiet, on the down moves, what happens is you have quiet accumulation. Okay, there's no selling. On the up move, you have a ton of volume coming in. Okay, and then the handle starts picking up some volume here, and it just shows the kind of accumulation that can cause a stock to explode higher. So I really like the pattern on that. Oh, it does have a weekly squeeze? Oh, that's fantastic too. So if we come over here and look at a weekly chart. Oh man, beautiful. Look at that volume spike there too. All right, so we're going to have to get busy with that one. And it's nice because it's a lower price stock. ISRG, what does that one look like on a weekly? Oh yeah, that's beautiful death. So, and one of the things too is you'll notice that obviously I'm focusing mostly on the long side because this market is pretty bullish, and I don't fight trends. I used to do that. It's not that profitable. And on ISRG, this is great. I'm not doing anything on the long side here. We're just selling call credit spreads on rallies. Okay, it's a beautiful weekly squeeze setup, yada yada yada. And what happens is that I don't actually watch the news. I don't have a TV on. I don't watch. I'm not watching Bloomberg or CNBC or anything like that. I'm just looking at patterns, and it's so much easier. Because if you're listening to news, no matter how unintelligent you think the newscasters are, you're going to get influenced by their opinions. And remember, their only goal is to keep you watching so that you'll watch the commercials. Okay, they don't care about informing you. They just want to say stuff that keeps you hooked so you'll watch the commercials. And if that's their only reason for existence, then there's no reason to watch them. Now, sometimes it helps to have like CNBC on with the sound down, and you can just watch the ticker to see if there's anything going on. But I don't know. I don't even do that anymore. Yeah. So NK. So for ISRG, ISRG is just a good example of one of those. You just have to work the orders, and a lot of times, you may not get filled. But if you use the price, like here, we're at 366. Expected move $6. So if we looked at the 370s here, so that it expire tomorrow, you can get an 80-cent credit. Now we may not get filled. Okay, you can see the big spread here. I'll send it. We'll see if we get filled on this. But I got filled right away. That's funny. As I'm talking about how hard it is to get filled on ISRG, and just get filled right away, and everything else we're having to work. But the idea here is that if you look at the the nice thing about Thinkorswim is that when you go and put in a vertical, the price that they put in here is fair, okay? But if you go to buy an option, let's say I want to buy this call here, that price is the rip-off price, okay? You're going to get ripped off. You want to pay the mid price, okay? That's the price that they'll deal with you. The guys on the floor will actually give you that at the mid price. But if you don't know that and you're uneducated, and I don't mean uneducated in a bad way. I mean uneducated like you don't know how it works, because none of us know how it works until we learn about it. Then they keep the ask deliberately high to pick off people who just buy at the market. And by the way, if you go in and say, oh, I'm going to buy 100 here at the market, they'll actually raise that to like $1.75 and fill you there. Never do market orders if you're buying a call or buying a put, okay? You're just overpaying. Okay. So that's pretty funny. We got filled on that right away. Well, I'll put that one in there too. But yeah, normally, NK, it takes a while to get filled on those. Of course, that's the irony. This is a call credit spread. That expires Friday. Well, that's a good question. When you do stops, do you do market orders? So, yes, but I don't place stops. I don't place physical stops on options. Those tend to get picked off. So what you can do is just do conditional orders, like especially on directional trades. You know, if you buy an option at 8, and you know, if Apple goes to $495, I don't want this option anymore. If I'm traveling, you can do it as a market order, or you know, as a limit order plus 10 cents. But you're, you know, the point on that too is if you do a stop limit order, if you're traveling and you do a stop limit order and it just goes right through it and it doesn't come back, you're not going to get out. So it depends on the situation in terms of what you're doing. You know, if you're able to watch it or not. Tesla just is beautimous here. All right, so let's see here. Sorry, I say strange words sometimes because I have 3 small children, ages 3, 5, and 7, so I get caught up in their dialogue sometimes. My daughter was saying that something was beautimous. I was like, what's that mean? She's like, it's so beautiful that it's enormous. I'm like, it's enormously beautiful, beautimous. I'm like, okay. Oh, ASIO, yeah, ASIO is actually another good, a good one. So let me do a quick survey here. How many think, okay, so it's, let's say September 26th. So let's call it by Thanksgiving, so 2 months. 2 months from today, now you want to give your honest answer here because this will be a good sentiment survey. Oh, nice bounce there, ASIO. So 2 months from today, 60 days. So here we are in the S&Ps. I think we're going to be in some volatility here. So we're going to either get a move to 1750 or to, let's call it 1600. So just say up or down. How many think we're going to be at 1750 up, and how many people think it's going to be down? Up, 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 up. Up, up. And say your honest answer. Don't try to say the right answer. Say your honest answer. This is a good sentiment thing. I'm seeing about 80% up. This is great. This is great. Okay. Don't care. Okay, so here's the thing about this, guys. Now I do this when I travel and I go to expos, and I've done this before where if I'm in a room and I ask this question, and if there's like 75, 80% of the room all thinking the same thing, it generally does the opposite. Okay, so just kind of keep that in mind. So we got about 80%, and you want to say what you honestly think because that's what makes this so powerful. So we have about 80% of the people, and it doesn't have anything to do with your knowledge of the market. Remember, nobody knows what's going to happen, right? It's just what is your personal feeling. So if this is a random sampling of the investors right now, and if 80% think it's going to go higher, there's a good chance that if everybody thinks it's going to go higher, they're already long. So who's left to buy? No one, and that's when market tops happen. So just keep that in mind. It doesn't mean that we're guaranteed to go down, but keep that in mind because that's a good sentiment indicator, and it has nothing to do with people's intelligence or not. It's just if everybody's doing the same. If just pretend that there's 500 people on the planet. There was a nuclear holocaust. There's 500 people left, but luckily the exchanges are still open. So if there was Apple and all 500 people put all their money in Apple because they all thought it was going to go higher, well, guess what? There's no one left on the planet to buy Apple. It's going to go down. It's going to start drifting down and hitting stops and stuff like that. So just keep that in mind. That was actually I'm going to take a screenshot of this so I don't forget. I'll talk about this in the video tonight. Let's see. Snag it. Do you trade weeklies on the indexes? I do. The thing I found is that a lot of times, well, especially like on the SPX, they're hard to It's so funny, ISRG. Oh, it's so hard to get fills on. It takes forever. We get filled right away, and it's making money right away. Okay, so, wow, Tesla, nice. So SPX. So SPX, this is, now by the way, this is one way to save commissions, is that if you trade spiders, so 10 spider, so 10 SPY equals 1 SPX. So if you do a trade, let's say you do 100 spiders, well, you could do 10 SPX and your commissions would drop by 90%. Okay. Now the spreads suck. You know, the spiders are much more liquid, but just think about that, because if you are starting to to get to the point where you're doing a couple hundred spiders, it actually does make sense to look at the SPX. Oh, nice. Look at Tesla. Nice move in Tesla. So on SPX now, SPX has got an expected move of $10. Now, SPX makes me a little nervous because you can get some crazy moves here. But, let's say that we wanted to do a credit spread. So 1695 minus 10 takes us to the 1685. The 1685 puts are $1.35 by $1.50. So if we sell this vertical spread, guess what? 60-cent credit. This falls exactly in line with what we talked about on the individual stocks. Okay? So we could do this trade. Now, I'm not going to do this trade because the indexes just make me nervous here. I'm completely fine selling a put spread on LinkedIn, but the markets just, because of the whole triple witching last week, I mean, the markets could go down 20 points tomorrow. So this is not a trade that I'm willing to do this week, okay? Now, we could go into next week and say, all right, is next week a short week? Oh, no, it's just quarterly expiration, okay. But you could go, we could go, let's go here, 8 days out. Never mind, that's end of quarter, okay. So we could say, okay, now this is $30 out. So 1695 minus 30 takes us to 1665, okay, sell vertical, boom, 65-cent credit. So anytime you can get at least 50 cents for one standard deviation, it's good, and that gives us some time. Okay, so that'd actually be a decent one to do. In general, though, I prefer doing individual stocks. I kind of use the indexes more as guides, and then I like to do the individual stocks. It's just kind of what I like to do. But you can do the same thing, and I will do iron condors and things like that on the SPX from time to time. Let me see what orders are still working here. No, so I'm still working the REGN, Priceline, and LinkedIn spreads. I have not been filled on those. Let's see. Dun, 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 dun. All right, so Tesla X great. Apple's interesting. I'm watching that. The markets here are kind of going into quiet mode. LinkedIn, boy, I'm tempted to be more aggressive on LinkedIn. I mean, once it gets through that 786, it's typically long gone. So an example again, now this is what I've learned over years and years and years of doing this. The gut instinct here is to chase it, like let's buy some cheap call options, right? And I can guarantee you that that's the worst idea ever. Now it may work. Okay, don't get me wrong, it may work, but I'm talking about consistency. And what you want to learn is consistent probabilities. What we could do here to quote-unquote chase, to at least give us an edge, is sell an at-the-money put spread. What we're going to do here is we're going to create a situation where we have a fairly favorable risk to reward ratio and we have high momentum. Okay? So I will do that. Uh-oh, confirm and send. Oh, that will confirm and send. You know what? Screw that. Okay. So I can't do that because that's going to offset my other order. However, we could do a debit spread. All right, so we're at 254. The 255 calls, the 250s. So what would this be? You know what? What would be an out-of-the-money debit spread here? That doesn't even make sense either. And when the premium is this high, you just have to sell premium. So, okay, so Virgil, that's a good question. So, John, last week you suggested a call debit spread on LinkedIn after watching it fall the entire time. I exited for a small loss when it bounced off the snow line yesterday, and today I'm regretting that. How do you manage these short-term debit spreads? Virgil, I actually think you manage that just fine. It really comes down to your main goal as a trader is not to make money. Okay, if your main goal is to make money, you're not going to make any money. If you realize that your main goal, okay, so here's your trading account, right? And if your main goal, and think of it as like I always say, think of your trading account as like a field, like if you're a farmer. As long as you have your field, you can grow crops. So your main goal is to make sure your field is, fertilized and all that kind of stuff. But if you neglect the land and it goes bad, you can't grow anything, you're screwed. So, this is a horrible decline to sit through, and it gave the opportunity to kind of get out at a small loss. That's great. There is no way to know that it was going to do this today. So I wouldn't be hard on yourself. You can actually make a lot of money in trading by not being perfect, and I can count on one hand how many trades this year that I would consider perfect. And by that I mean, and Tesla has happened a couple times where you buy calls the night before and you wake up the next day and it's up gaps up $5 and rallies $3 more and you get out. And those are what I call like perfect trades. There's just no heat at all. But LinkedIn here is just a beast. Yeah, and Kaya, that's a great question. Is you could actually just go into next week as well. You could absolutely do that. Yes. Oh yeah, and so Yahoo's going to be interesting because they got that Ariba deal, or however that's working, however you pronounce it. So they stand to actually make a lot of money from that, and so this could actually go. I think is it Ariba or Aruba, but it's going to have a market cap of like 120 billion, and Yahoo owns a good chunk of that. Thank you, Alibaba. Alibaba. So I look at this and think that's great. It's just, it's one of those things that's like, wow, it's extended. Are there any opportunities here? We can look at the options. And this might be an interesting longer-term play, honestly. I mean, that's a big, Yahoo's definitely in a kind of a turnaround. Decent volume today, open interest. We're at $33. So, I mean, selling the $33 puts here would be interesting. Now, I'm just going to sell these naked. So, just to show you what that's like. So, if you do this, what's going to happen is you're going to see that your risk-reward ratio is kind of crazy. Your max profit is $390, and your max loss is $32,610. So, you might look at that and say, John, that's an insane risk-reward ratio. But obviously, if it goes to zero. Okay? So, what I'm doing here is selling pure premium. Because it's a lower price stock, I'm willing to do it naked, and you can see that's the buying power that it takes up. Now, if you've got a smaller account, it would be more appropriate to do that as a spread. Okay? So what happens is, instead of getting a 40-cent credit, you only get 20 cents, but your max risk, instead of being $32,000, should the stock go to zero, your max risk is only $300. Okay? So I'll tell you one thing, my trading life changed when I made this realization. When I see a stock that I like going higher, instead of buying a call, I sell a put. And the consistency aspect increases, tenfold. It's a minor tweak like that. Now, I still buy calls, but I just do it, it's got to be the right setup. But when in doubt, When in doubt, sell. All right. Now the funny thing is, yeah. So Sosnoff, he won't buy a call, but here's the reality of it is though, is that the big money you're going to make is going to be being patient for call. Like, so if we look at the 175, here's the 175 180 put spread. Okay, I'm up $450. Here's the 185 180 put spread. I'm up $990, and then I bought 20 175 calls that expire next week, and that one's up $7,000. So the reality of it is, if you catch a good move, okay, if you catch a good move, you're going to make more money with call options. Okay? So, can you guys hear me, or am I just? Oh, is it good? Okay. Okay. So I'm not sure where I think I cut out there for a minute. So what I was just talking about here is that, okay, what I was talking about here is that when in doubt, it's much better to sell premium, but there are going to be opportunities for call buying. And you'll see here that again, I sold the 175 170 put spread, made $450. Sold the 185 180 put spread, made $990, and then bought 20 calls. Now, to be fair, you could probably compare 10 calls, so it'd be half this. But you can see here clearly the profit on the call options is much bigger than the profit on the spreads, right? And then, and I did this one as a little bit bigger trade, so I have some more call options down here that I actually need to kind of unload some of those on. So clearly, you can make more money with call options. The thing about it is that the way we trade these is that these will make money 92% of the time. You'll make money doing it this way, okay? Whereas this way, the odds drop a lot. I don't know the exact percent, but it's way lower. So what happens is that these strategies are way more consistent. And obviously you can do them with bigger size and stuff like that too. But if you nail a move, the call option, if you have a straight call like this, obviously it has a bigger impact. The problem is that you've got to learn which setups have the potential for the big moves. And that's that's something that we try to teach here at Simpler Options, because that's the move that you want to be patient for. You don't want to buy calls or buy puts on mediocre or half-baked setups. You want to be patient. Sometimes weeks will go by and I won't buy a call or buy a put. I'll just sell premium. And we call it, it's like when the elephant walks by, your gun better be loaded. And what happens is a lot of people get distracted. They get in a bunch of crappy trades. They spend all day and all week thinking about their crappy trades, and they miss the elephants that walk by, meaning the nice setups. They're very clean. They're very clear. But you've got to have the patience to wait for those, because most of the time when they come along, people are too distracted by everything else that's going on in their account that they miss them. Okay, so you just trade light, sell some premium, bam, here comes a weekly squeeze and a daily squeeze. Great, pounce on that sucker. The lowest probability, if you want the lowest probability trades, okay, is out of the money calls. So if you buy out of the money calls, you will lose money about 80% of the time. And unfortunately, that's what most people do when they come into the options game, is they're like, oh, I'm going to buy me some cheap calls. And that's the sucker's game. And that's, in Wall Street or Chicago or wherever the option pits are, they love that. They want that volume in the out-of-the-money calls, because that's how they make their living, is they sell those out-of-the-money calls and the out-of-money puts to you. Okay, so let's take a look at a couple different things here. So, right, let's look at Yahoo. Yeah, I did take Yahoo. So Yahoo, I did not do a Yahoo. I did not do a spread. Okay, so I sold the 33 puts naked. They're at the money. This is a high risk trade because you have a lot of exposure, but you could certainly do that as a spread. But I figured what we could do with this is that tomorrow, so tomorrow on Friday, when we're all back in the live trading room together, I'll show you like how to manage, Yahoo and stuff like that. So then a good question. Okay, so what to do about Baidu here? So this is where, and so Friday is going to be a lot of fun because on Friday we end up typically managing most of these trades, right? And we'll put on some more trades this afternoon. So here we are. Baidu has rallied. $152. It's rallied $1.65. We have the 148, 145 put spread, and you can see that the expected move is $2.50. So for it to come all the way down to 148, that would have to actually be a 2 standard deviation move. So we're actually sitting pretty. Okay. So here is the question. We could close this out now for 9 cents. Okay. I forgot what we sold this for. Probably 50 cents. I don't even remember. 30 cents. So we've made most of our money, and what happens is that the big decision that comes up is when do you take it off? Because if it expires worthless, not only do we get to keep that extra 9 cents, we don't have to pay any commissions on it, okay? And that can add up after time. But if Baidu gets downgraded tomorrow and drops 10 bucks, we're going to get to max loss, and we just risked 9 cents against a loss of $3.91 or $2.91. So I go back and forth on that. I tend to err on the side of seeing if it can expire worthless if the math is in my favor. But if it's close, if it's like, wow, man, if that just goes down a point, we're going to lose that money, then I GTFO, which of course means get the heck out. So Friday is the day that we spend a lot of time actively managing those trades. So is it okay to take that off and take the money and run? Absolutely. I'm personally gonna sit on it. My goal here, so part of my goal is that I would like to buy back the short side for a nickel. So one of the things that we're going to do today at the close is all of these different trades that we have on. I'm going to go through. I want to put good till cancel orders on the ones that are close to close out the short side at a nickel. Because by doing that, you take off 100% of your risk, okay, and you leave the lotto ticket on in the form of a long option. And I think that's a fantastic strategy for this week because tomorrow, who knows what's going to happen. But what you want to do is you want to have all your orders in today, good till cancel, so that tomorrow morning, anything that, because what will happen is tomorrow morning, the theta decay is going to get destroyed. Okay, any out of the money options, like right now, see how it's trading at 13 cents. If this thing opens, if Baidu opens up around here tomorrow, that's gone. So then what happens is we buy that back for a nickel or less. All of our risk is suddenly off the table. And what's beautiful, the best thing in the world is on a Friday morning, you're sitting back, and you're leaning back in your chair, you got your arms crossed behind your head. And when the market opens, all you start hearing is ding, 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 and that's just all of your short side options being bought back at a nickel. It's a beautiful thing because it means the rest of your day is a cakewalk. And that's just part of the trade management. We'll spend a lot of time because Friday is trade management day. That's the day that we're going to be. We got to manage all these trades and figure out how to do it in such a way as to increase the probability of reward while reducing risk. Okay, and it's a fine line because right now we could take this profit and be fine with it, and it's okay to take this profit. But I'm also evaluating the risk. If Baidu is going to come all the way down here, that's a 2 standard deviation move. There's only a 4% chance that can happen. 2 standard deviation move, 4% chance that can happen. So it's just playing the odds. Oh, Gracie. You buy back the shorts and options expiring this week. Yes. Yeah, we're not worried about the ones next week. And if you have Thinkorswim, the standard deviation is right here. I don't know where it is on some of the other platforms, but that's the number. Just take this number and add 10%. So that's for this week. For next week, it's going to be that number, 584. Somebody asked what I think about Apple. I think Apple's a piece of crap, but that's just my, I try not to have too much of an opinion. The fact that when it gapped up here, failed, that was normal, but the fact that we couldn't push through here and go higher, that's very telling. At this point, I'm looking for Apple to fill its gap here at 466. Oh gosh, yeah, Gracie, she'll sit here and it's like any time that she sees a person walking outside like 100 yards from the house, she's got to let us know. Almost time to get the shot collar again. Am I selling call spreads on Apple? I'm not going to today because Apple has been such a so sensitive to news. But I'm planning to tomorrow morning. So if it gaps up tomorrow morning, I'm going to sell call spreads at the open. Yeah, I try not to have too much of an opinion, but it's hard on Apple. Okay, so let's, what time is it? Okay, so we're getting close to lunch. Let's take a look here at Sohu. And by the way, so those of you guys for those of you that are in the open house, typically what I do on Thursday is, we're setting up a few trades here. The last hour, though, is pretty hectic and pretty active. We'll be doing and setting up some stuff for just the last hour, because the overnight, the options overnight are going to lose a third of their theta decay at the open. So any especially at the money options, the big payoff from Thursday to Friday is selling at the money option spreads. Now it's a little higher risk because we're not, it doesn't have the standard deviation. But what happens is say that we sell, an at the money put spread on Apple at 495 and it gaps up to 490. That put just gets destroyed. Then you buy it back, and then you could actually reverse and sell the call spread. So that's the kind of stuff that we'll be looking at later today. And the spreads, Carolyn. Carolyn, we'll take some. Yeah, we'll look at. I'll show you. I'll show you some easy stuff like that, like when we're in Vegas. Okay, so where is? Okay, so Carolyn, so here, guys, I'm looking at. Let's take a look here at Carolyn's chart too. So Carolyn's got a chart here on Google. So if you guys are looking at this, so Carolyn, correct me if I'm wrong. So you've got a lot of support here, and you're interested, or the idea here. So the question is that if there's a lot of support here, what's a good way to do it? Well, you could buy a call and see if it's going to come back up into this level. Okay. Well, the problem with that is that what if the trend continues lower, right? So this is so buying the call, that's the initial way that people start trading options. But then when you start learning about how options work, the better idea is to actually sell puts below. So this is one of my favorite strategies with Carolyn's work, is to match up the math with Carolyn's levels. Okay, so what do I mean by that? So Carolyn's levels down here go to 873.55, right? So, oh, thank you. Now I can see it. So Carolyn's levels here. Now, right now, I've got a call spread for today. So the call spread I sold, guess what, is up here. Okay, it's above this key resistance right here. Now, if I wanted to sell a put spread on Google, what I want to do is get below all her support clusters and see if that also lines up with the math. Okay, so now what I'm going to do is I'm going to come over here and look at Google and say, okay, now we don't need to do it. Now the good news is you can actually start even setting up some of this stuff for next week too. Although the best time to sell weekly options is kind of like Tuesday, Wednesday, Thursday, Friday of the week that they expire. If there is, though, a setup like that where you want to, a little bit more time involved. But if you take a look at this, if you want to do an option that expires tomorrow, well, guess what? The expected move in Google is $7. Okay, we're at 879. 879 minus 7 is 872. That's below Carolyn's level. So the easy way to do this here for tomorrow would be, if you wanted to do one that expired tomorrow, is you'd sell the 870, 865 put spread. Now, the credit there is a little thin. Okay, it's only a 32-cent credit, but it's an extremely high probability trade because it's outside of the expected move and below Carolyn's levels. Okay, so I'm going to place that trade there. And that got filled a little on that kind of right away. Now, if it's a bigger term move, like if you think it could result in something more, then you could just go out a little bit further, okay, and sell the spreads below that. And that's something we can kind of look at there. But if you guys are, for those of you, and I've talked to a lot of people that watch Carolyn's work, and just using selling spreads outside of her levels and giving it a little bit of time to work out is a very, very consistent way to do that. Okay, I just got filled on a couple more. Nice, Sam. Got it at 52 cents. Good question. So would you place more contracts on a lower credit premium? You could. Just remember, the lower credit premium, you've got a little bit more risk exposure too. All right, so we're filled there. Will I ever, Gail? What's your position in Netflix? The way you asked that, I don't know if it was positive or negative. So do you have a call spread, or what did you do? So 879 minus 17, that takes you all the way down to 862. Okay, so technically, to be safe, you'd want to sell the 860, 855. Now you've got kind of a double whammy in your favor. You're below Carolyn's key levels, so that's a plus, and you've taken the math into account. So that's an extremely high probability trade right there. So you just kind of want to look at that, and you've got the reason I'd be a little bit more conservative on Google is because it's underperforming the market right now, and there's a lot of support there. But if you can take both the key support and the math into account, you're going to put the odds in your favor. That's the thing. Extreme physical pain brings mental clarity. Good question. Yeah. Okay. And you guys, and I've talked about this a couple of times, I think, in a class, but I may not have really. I haven't done that here. So here, I'll show you real quick. So this is how. Oh, this is going to be brutal because I don't have my pen. Okay, that's all right though. So we got Thursday, Friday, Saturday. That's okay. This makes it more fun. It makes me look like I can draw like a 5-year-old. Thursday, Friday, Saturday, Sunday, Monday. Usually I have a pen tool that I use, but I just either got too lazy to set it up or forgot. I think it's like in my drawer right next to me. So this is the life of a weekly option. So obviously they're closed on the weekends, right? So this is today. This is Thursday. Now, the current weekly options are going to expire on Friday, right? But the new weekly options that are coming out today are going to expire on this Friday. What happens is that these options come out, and then a lot of people sit there and they'll think, ooh, guess what? You know what? I'm going to sell options on Thursday and Friday to, don't tell anyone, I'm going to get that weekend theta decay. Well, what happens is the market makers, they don't take trades that they won't take the opposite side of trades that they know they're going to lose money on. So what they do is they take the opposite side, but they mark down the premium, okay, to Tuesday's levels. So the market makers are going to take the other side of the trade because they're buying the options cheaper. They've marked down the premium to Tuesday's levels so that when they take the opposite side of this trade here, they're buying the options cheap and they can do it that way. So the best time to actually start selling weekly options is on Tuesday. Okay? That's when the theta decay really kicks in. It's not a huge deal. It's just something that you want to be aware of. There is very little weekend theta decay because of that. So what happens is if you sell an option on Thursday, you can still make money on it, but it's going to be more of a directional play. Okay? Then the theta decay will really kick in on Tuesday. Conversely, though, if there's a trade that you like and you want to buy a call, it's perfectly fine to buy calls or buy a put on Thursday and Friday and hold them over the weekend and dump them on Monday, because the implied volatility will be low here and you'll actually be on the same side as the market makers. And so you don't have to worry about that too much, but there's just, there's little nuances like that 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 are helpful. Tesla acts great. Just this is so far very kind of normal, kind of a pullback. And by the way, I mean, the stock's been up $2. It's perfectly fine to take profits. It's because remember, what if Tesla what if Tesla falls and goes negative today? Well, we've got profits right now, so it's always good to take profits. Nice, Gail. No, so for the orders, so I'm not filled on Priceline, on LinkedIn. I'm just going to leave those orders in over lunch, and then we'll see kind of where we are after lunch. I mean, the markets, the S&P, everything, the markets here look okay. They don't look like they're going to roll over and die. The Nasdaq's pretty good. But yeah, you know what? We'll sit here. We'll have a break for lunch, and see what's shaken when we come back. For those of you that are in the open house, if you're interested in joining the room, so what's going to happen for those of you that are in the open house is that tomorrow there is no more open house, so today is the last day, and thank you for joining us. I will be back. We will be back after lunch doing some trades, so don't log out. If you log out of GoToWebinar, you might not be able to get back in. Tomorrow, though, if you're interested in kind of following up on the trades and watching me continue to trade and manage these trades, you can join the room and come into the live room tomorrow.